Good afternoon. I'm Dan, your host for today's Traders Exclusive webinar, Trading Strategies for Today's Market. Please check out our website, tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you'll find a recording of today's webinar. Before we get started, I'd like to share a quick disclaimer. Where is the disclaimer? There it is. I'd like to share a quick disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Options, market data, and recommendations are subject to change at any time. Performance is not necessarily indicative of future results. First off, for today, please hold your questions until after each presenter has finished. It can be disruptive otherwise. And so I would like to introduce our first speaker. Our first speaker is going to be Thomas. I'm going to, I think you're, I'll have to make you a presenter. Thomas, I'm going to make you a presenter. There we go. So Thomas, you should be able to show your screen.
Yes,
and I'm going to give you a little introduction here.
Sure.
So
can you hear me?
This is, one second here. This is Thomas Barmann from NeverLossTrading, a division of Nobel Living LLC. Tom has more than 30 years of trading experience in stocks, options, futures, and Forex. And he is into algorithmic trading for private investors. And he'll be able to tell you all about all the great things that he has to share. Thomas, you want to take it away?
Absolutely. Thank you very much for the introduction, and welcome everybody. Good afternoon, good morning, or good evening, wherever you are in the world. We want to make it exciting. Today's presentation, Algorithmic Trading for Private Investors, and I try to give it all. I give you all the insights of what's needed to turn things your way in trading. Again, my name is Thomas Barmann. I want to make you aware of the risk in trading and that I'm here as an educator and personal trader and trainer, not here as a broker, dealer, or financial advisor. So going a little bit into it, history. Yeah, we started out more than 10 years ago with hotel meetings. That's where I'm presenting at the Caesars Palace in Las Vegas. But quickly we recognized that most of the people through a classroom setting, they don't get to be traders. So we focus one-on-one trading, one-on-one training with you. That has a big advantage. We do it at your best available time, at your best available resources, and we are working together towards a plan that suits you with your available time, with your affinity to certain trades. And I'll go into this, yeah? So we are more than 10 years in business, so we have a lot of experience. And with trading, I got a little more experience than those 10 years, definitely. And we are focusing on algorithmic tradings. Yeah, algorithmic concepts to follow institutional money moves. And I'll show you how that works and what we did. Why did we do that? Because, you know, we wanted to invest 10,000 hours. No, we didn't. Other systems didn't really work out. Success was random, and we wanted something consistent. Our name, NeverLossTrading, comes from the idea of never stop loss trading, so a concept to repair trades. I'm not guaranteeing that you never lose a trade. Yeah, we have high probability trading, but we repair trades, and you'll see that that is a very, very essential thing, so that you don't take your stop loss necessary. You adjust the trade, you tune it, you tweak it. Sometimes we turn losers into winners, or we turn the losers into small losers and let our winners come home as they were planned. With that said, today's presentation, rule-based long-term and short-term trading. We want to identify underlying changes in supply and demand, specify entries, exits and stops. We want you to be a mechanical trader as good as it can be. no room for interpretation, or little room for interpretation. Yeah, and we also want to talk about strategies, because there's multiple ways for going to market. There's not only one, and that's the beauty of trading. Depending on your personal circumstances or your preference or what you want to achieve, we'll put them together for you and help you putting them into the market. And we are in favor for risk limited trading. Risk limiting in all you do, because if you don't limit your risk, you might have these big size losers, the big drawdowns, and this will not get you where you want to be, definitely not. And key will be to follow a defined financial and action plan. Like a corporation, it's a business. When you have trading as a hobby, it's a wonderful hobby. In hobbies, we sink money in. In trading, we need to treat it as a business. We want to have consecutive progress and produce money with it. Yeah, so therefore, big difference for hobby. Wonderful, like golfing. So I'm not a good golfer. I can put money into this, but I'll never make money with my game. But on trading, we want to take it serious and we want to treat it like a business. And I show you how that is done. Algorithmic trading. What do I mean by that? It's basically using computer programs that follow defined instructions to decide if there's a trade setup that is valuable to take. Yeah, specifying an entry condition so that you can use a buy stop or a sell stop order, specifying an exit condition. With our programs, we don't let the program auto trade for you. Yeah, we let you make the choice. Yeah, algorithmic trading with human interaction. You'll push the buttons, but all of our setups can be pre-programmed. Yeah, today I had a lot of trades. I show you some of them, and they're all pre-programmed. So therefore, I don't need to tweak and change and do the orders. It's pre-programmed. Bang, goes in, goes out, is filled or not, or goes into the next day. Yeah, we have an algo to analyze those changes because it can't do it quick. The computer is wonderful, yeah, doing this, and so therefore we use the algorithm to see where institutional money moves, where changes in supply and demand are recognizable in the underlying structure, and want to be in the trade before it happens. Price is a result, not a variable. Important. Yeah, if you take a simple algorithm here, it's a cyclic algorithm, a Fourier chain. Yeah, it's a French name, and so the price would be the result of that algo or equation. However, this is not going to get you the equation where you want to be, because it's going to give you a cyclic curve between those sinus and cosinus functions. But you can't solve the future for it, because you know the future of a trade is always depending on a shorter term pre-happening, and then it goes. Look, this morning we were clear we're going up, and there were lots of wonderful trades to be taken in that direction. So the way we go to market is we go in a kind of a looped feedback channel. Yeah, so we have algos that see what's going on, and then we feed the entire result back, go through again, and then we get an indication. Yeah, price indication. Is something there that's worthwhile to trade? And we formulate a threshold. I'll show you in a second what that is. And the algo goes through equations, variables, filters, and looks between signal and noise, which is a happening that most likely leads to something, compared to just noise, some internal happening of a daily volatility or statistical volatility of the price move. And so that's what's needed in today's world. If you use just the MACD and you can make money, God bless you. But we cannot, and so therefore we develop those systems, and they'll spell out very easy trades for you. You see here, buy above or sell below a certain price. Yeah, so bigger, greater than, or lower as, yeah, and we'll do that because price moves are erratic. You see here, it's like a seismic diagram. Some underlying change of pressure is there, and with the underlying change of pressure, we extrapolate, if an eruption happens, how far a price move can go. That's very, very essential. So you measure always the pre-stages of a price move and how far they can reach. Yeah, so we give ourselves entry and exit condition, and also we say, okay, if something goes wrong, this is where we want to take a stop, or never stop loss trading, where we want to adjust the trade because we feel it wasn't right, and that happens. So the general assumption of a price move is it's normal distributed. Here, typical bell curve. The reality, it's erratic distributed. So you might say, okay, what's the big difference? Here it is. Lay those two over each other. If you decide from a normal distribution and you think there's a reversal to the mean, it's not going to happen in trading. Do you know these situations? Everything moved, then you want to get in, and then it goes back. We want to be in the price move before it happens, because that's the only way to make money through it. When it's over, and you don't want to be late in the trade. And with that said, I give you an example of how we formulate it. We have a price threshold, so buy, stop, order above 203.50. If you trade an option on this, then we also have a limit order on the option. It's not only that we go market price into this. Then we have an entry, we have a SPU measure. The SPU measures the expected price move from entry. Speed unit, yeah? It's a question of internal volatility. And then we have surely a stop or price adjustment level. And it's a fixed value too. So all of these shall be spelled out by the system, put in front of you. Whatever you use, if you don't have that, you're in trouble. Example, Lockheed Martin trade we did. Yeah, we just had it giving a buy above 370.16. So that was on that bar. Next day validated the trade. We traded this one with option, yeah, call options, and then target 2. So we have 2 targets. After target 2 is reached, 85% of the time, the price reverses, halters, or retraces. So if you know that, you know when you have to be out at target 2. And that's what we did. We hit that trade pretty easy and nice, brought it home. Yep, daily trade, 2 days in the trade, home, done, gone. And surely we had a stop. And in our dash bar up there, you see the expected move for one SPU is $9.93. Let's do it $10. So a $20 move was on the horizon. We followed through, return on cash 2.7% if you trade the stock and you use cash. Then we had a target price formulated. Yeah. We had the stop formulated. We had the risk reward appraisal, which says 2.3. For every dollar of risk, you have $2.3 of reward. Yay, take it, bring it home. Yeah, and we had bar number 2 of our series because we color the candles. So that's how we trade. Second example, Cisco, just recent again. Yeah, so you see here all Mayday trades. Yeah, just from last month, we're already in June. Yeah, so buy above 44.58, and there's a second signal on it. Happened. Yeah, we got in, we got out, we traded an option. We got in at 140. Target was up there, out at 290, wonderful short-term trade. And I show you more examples, but that's what I'm talking about, the price threshold. Clear formulation, the next price has to be above or beyond that threshold by a certain tick. And so then we'll get in and we'll take it home and we get out, yeah? And why does that work? Yeah, if you look at the market, yeah, institutions are responsible for more than 85% of all transactions in the market. Institutions accumulate or dispose assets, and with that they create an underlying change in supply and demand that can be made visible, and other institutions follow it too. It's just you as a private investor usually have no access to that. Yeah, with our system, we look where this is happening, and we are with the crowd that follows the leader, but you know, we have an edge because we are faster in and out of a trade. We can go in with an entire portion. If one of us buys 100 contracts in whatever option, it's a big deal. For an institution, that's nothing. And so therefore we have a great deal. If we buy 10,000 stock, it's not going to be visible in a stock that sells 10 million in a day. So therefore, we have a nice advantage. We can open and close entire positions all at once. And I show you, for example, the ones that I closed today because it was a real super day before that meeting, and everything happened automatic anyhow because it's pre-programmed. And to give you an example here, what can be done, here's a client example here. So client came to us, he's with us a year and a half, and he wanted to trade preference to option trades. We work one-on-one. Every client over the last 10 years had a different preference, and that's nice and good, but so therefore I cannot sell a standard suit to everybody because their time and their affinity is different, so therefore we do individual solutions. Yeah, trading preference here, options. Yeah, so then we have a goal. We want to have a win ratio above 65%. That's what we try to commit to, and we will put it on the spot, and I'll show you all the trades that were done between January and end of May, and then we count it up. And the client wanted to make $2,500 per month with his holdings, and we saw that very feasible, and we'll see if we were able to attain that. And he had about 2 hours a day that he could spend trading, preferably putting everything in pre-markets, starting early, like 7 a.m. in the morning, putting everything in, and after 9:30, another hour. So that was his time available, and 5 days a week. Yeah, and a risk tolerance between 2 and 5% per trade of the holdings. All fine, predefined, nice for a business plan. So now I show you, and it'll be a little cluttered, and I go out and show you then the results, what can be done. Yeah, the advantage of option trading is you have a leverage. 20, 50, 70, 100% return is easily attainable, but it's easier said than done. It's attainable, let's say it that way. Yeah. The challenge is if you want to invest 80% of your money and you have a 3% risk tolerance, calculate with me. 80 divided by 3, you need in average 26 trades a month. Yeah. That's a lot of work, but that means consequence of what you can do in putting it in action. Yeah, but on the other hand, what does it translate to with 20 trading days? 1 or 2 trades a day. Big deal. Yeah, so therefore it was doable. And here are the trades. I just listed it from because we count all for them. Not every client gives us the trades. Yeah, but you see here we had 36 trades in January and produced $8,745. We had, or the client had 35 trades in February, $19,000 of income. And here 14 trades then in March, 21 in April, and 16 in May. Yeah, but let me zoom into the dough of what that means. Yeah, so here going into the details, going into the details, we had 36 trades. In January, we didn't reach our goal. Okay, bad thing, but you see, let me go back one. We are counting $70 losses as a loss. Yeah, because we repaired those trades and now going forward they are in here, but our overall total goal, we had 67% through 5 months, so we achieved. Yeah, but we are very critical in recording and looking that we are on the right way. But the key to being successful is what you see here, $681 average winner, 371 loser. Yeah, so goes through the entire thing. So $1,151 winner average, $866 loser average. That's what high probability and good trading is about, and doing never loss trading, never stop loss. Repair your trades because you keep your losers short and you bring your winners home as defined. That's a concept. So you see, do you think that client is happy? Yes. He made $54,000 in 4 months. And he wanted to make 22,000 in the same time, so much less because 2,500 times 5. So it works. Did it pay for the tuition that the client furnished to us? Absolutely. But this is one-on-one training, looking at each trade, working it out and through. And so, for example, when you say, yeah, but how is it possible? These were my trades today, and you saw when they closed. Yeah, 6-3, 12-24. Closed waste management. Yeah, calls $3.30. All of these are pre-programmed. I have to do nothing for them. Verizon, First Solar, Baidu, Eli Lilly, Wells Fargo corporations. All these trades closed today and were gone done. Yeah, so the key will be a system that provides you direction. See here, spider. The pandemic kicks in, we are running down. You see, we color these bars in red. Red is a down series, and this is here also telling down, down, down. But there we had the big change in direction, and we had to repair some of our trades because we were still short for some here, and it didn't work out. So we had to repair them, but we did, yeah, and we brought them home in April, and we still made a good profit, and then shifted change to the upside. And you saw one of these upside change shifters was today coming home with 6 solid trades. Yeah, when you look at the QQQ and what's going on there, even more drastic downside move, but very early reversal. And so we are back with the Qs at the pandemic. People always say Q is just technology. It's not. Yeah, the big technology companies, Microsoft, Apple, Amazon, Facebook, Google, they're all in there, but it's about 50% technology, 15% to 20% consumer cyclic, PepsiCo, Starbucks. Then we have healthcare products in them, like 10% give or take, Gilead, for example. And we have also telecommunication like Sienna or so. Yeah, so that gives you a little bit, but so the key will be to make these indications part of your game so that you know what you're talking about, and the system, as you saw right prior, is providing those to you. And that's why we work one-on-one, because the system provides the opportunities. Trade finding is either in your system, like this top line, or even within our smallest system, we have trade colors, we have trade finders. We set the goals with you, but they should be above the 65% range. The individual time is considered, and there's a risk tolerance somewhere in here, but the key will be to have knowledge. If we come back to option trading, knowledge means you know where the price move indication is pointing towards, what's the valid option chain, because you know some products or stocks have options, but they're not tradable because they have a horrible bid-ask spread and no volume the entire day. Yeah, trade repair ability, max premium to pay or max premium to collect if you do a spread trade, strike price to select, time to expiration. All of these somebody has to give you to make it happen, like that client which I just showed you, producing these $54,000 from trading, risking no more than 3% per trade. Yeah, so therefore we work one-on-one because trading preferences are different. Win ratio has to be there. Dollar, it needs to be possible, feasible. Yeah, so if that client had said, I want to make 50% every month, I can't help them. We don't have a system like that, but we can continuously produce a good way of management, and we don't gamble. Also important. Trading time individual, if you have more screen time, you might do some day trading. Depending what your days are that you're available, some only want to trade a couple of times a month, longer term signals. We have all of these. In 10 years, we haven't had 2 clients with the same plan, and risk tolerance 1 to 5%. This is how we go to market, helping every individual, and that's what you should put in the back of your mind. If you work with us or if you work with a different educator, have a plan, a financial plan. How often do you want to trade? Which trades do you want to execute, how to find them, how to put them in action, and an action plan. Which trade setups do you prefer? How do you execute your trades? Best program them. Let everything be done on the system. The system tells you where the out order is. If you constantly change your orders, you will never make it to keep your losers small. Very important. Here's an example for a financial plan. Looks different for every person. Here is somebody who want to do certain day trades, certain short-term trades, kind of day trades from 4-hour charts with others, and that was the plan. Yeah, $50,000 in. That's how we distributed it. Didn't want to do all for the option, so therefore we have some stock trades, some option trades, doing a combination. And that's what we do. Besides our systems that tell you, okay, now it's time to trade, we help you putting a financial plan together that helps you going to market and making good decisions. It's not so easy to make a good decision, but with systems on the back. Yeah, so here's a Cisco trade that we did. You see 518, Cisco weekly signal had triggered. Okay, trade to the upside. Yeah, so the account you see here, the customer was appraising, because you know that's a whole total appraisal scheme. Favorable, favorable, favorable. I don't want to go through all the numbers, but when that is all that way, you'll have to trade basically, because your system tells you it goes long, you have to trade. So risk here, $3,500, you know, 3 to 5%. You can do the math on the back end. And so with that magnifying into it, you have all the increments. Here's your input fields. You say, okay, which price did I enter? What do I want to pay for the entry? So, and what's my price? So 140 in on last Friday, it was 290 out. Nice trade. Yeah, nice coming home. And so here's the trade on the chart. There it was. Yeah, orange signal is usually one of our key turning points. Trade to the upside, bang, in, done, gone. Yeah, very short period in the trade, not even 2 weeks, and we were home. Yeah, so depending on what time frames we take the trade on, they're longer or shorter term. We have monthly charts too. Yeah, our entry level system, because we color the bars, is trade colors. Yeah, and so you see situations, and I clicked on 2, where 2 of a kind, and if it's ticked out on a high, we'll trade. Was it ticked out on the high here? Absolutely not. 2 of a kind, ticked out on the low, and we trade. Yay, that was ticked out. 2 of a kind, ticked out the second candle high. Yep, in a trade. 2 of a kind to the high side, ticked it out. It always has to be after the reversal sign. So now you have the situations, yeah? And you see they repeat themselves here on Walmart. So the prior chart which I showed you was against Cisco's, that you see even with the entry level chart, it's possible. So on Walmart, we have multiple situations on here. First one, two of a kind, low was ticked out on trade colors, trade. And there we approximate the price move bar by bar. You know right from the chart how far the price moves shall reach. Next one, also a winner, easy to see. This one, also a winner. Two of a kind, ticked it out, go to the downside, bang, done, gone. This one is a loss, ticked in, boom, stopped. Yeah, so that happens. Losing is part of winning, but add it up. It was just in a very short period of time. We have 4 winners, 1 loser. We have above our threshold, 65% winners. That's our entry-level system, trade colors. The key system that we have, and that's also our best seller, and it comes with 20 hours of training. The first one, we work 4 hours originally, but I give you 5 if you want to sign up on it. The top line, 20 hours of training, because you need to learn how you all see what's going on here on that chart, because you see multiple indications, buy threshold. You can go with a buy threshold order, either trade an option or you trade the underlying stock. Stock trading is much easier because you don't have so many decisions. Yeah, and you see here there's always a target with a dot formulated on the chart, and these situations repeat themselves. You see here the E-mini S&P 500 index, and that's a big index. So you see here winner coming home, yay. Another trade, winner, target 2, 85% of the time. So that ended up here. We're out, and that happened. This one was a loss part of winning, but then bang, short trade. We came home again, brought this trade home. 4 out of 3, 75% attainment rate in our spec. Yeah, but when you say, okay, where you get all this from? At every bar we formulate here with top line, the target, the stop, and if it's acceptable, favorable or risky. When it's risky, what you do, you don't trade, or you find a strategy that makes it less risky. Yeah, so here it's acceptable. For every dollar of risk, you make 90 cents of return. Yeah, so that means when you put it in means it was a 24-point stop for a 22-point target. Good, yeah, acceptable, because if you win 65% of the time, you want that trade. But when you say, wow, a risk of $1,200, that's above and beyond my price threshold of what I want to risk per trade, not a problem. Then we E-micro S&P there's a lot on the chart, but the key will be there's a clear-cut price move that says, okay, sell me, and I reach out 5 to 10 bars, and then I want to be there. Sell me, I want to reach out to that dot, and it repeats itself. And this is giving you the mechanical trading you're looking for. And the composition of trading success. So therefore, I'm really liked that you are here today and that you take the time for learning what's all needed to go into the right direction. I put a little algorithm together. So indication, so you need to know where prices move. System has to tell you. If the system is weak, your decision is weak. Strategy, if you don't know the right strategy, it can be also detrimental for you. Risk management, key to this. If you trade at a firm, there's a risk manager. The day you violate the rules, somebody's going to come to your desk and say, John, if you want to keep on working here, comply to the rules. That's what you need to do for yourself, and somebody needs to tell you your max risk assumption, and that can't be breached. 1 to 5%, what's your max risk? 5%. Whatever you want to do, don't do more. Discipline. What does that mean? Prepare for trade every day, put your time in, because the key is in preparation. The execution is simple because you know it will be programmed. If the price is above the threshold, then I want to buy the stock. If the price is above the threshold, I want to buy Cisco at 140. Yeah, so very easy. Yeah, trade finding. So you saw we had to replenish 26 closing trades a month, so you need to open as many, and that is possible because the thing is, if you have a trade finder that all puts you forward and doesn't let you guess where prices move, because key to trading is trade where prices move and plan following: financial plan, action plan, and repair trades. Why repair trades? You might not never heard about it. Just look with me. If you trade, and I assume it's a dollar investment, yeah, and 70% of the time, 70% is your loser. So that's when you lose 70 cents. When you win 70 cents. Yeah, so that's how I do it. 2 cent slippage, bid ask spread. So that means when the option price is $1 is set, you win 68 cents and you lose 72. If you win 2 out of 3, you have a result of 64. Nice, good, easy. Now, if you only reduce your trade loss by 50%, yeah, and you saw we did that, therefore we have lower losers than the winners. The winners are higher than the losing trades. Then that's the gain is the same, give or take. However, you are coming out with $1, 2 out of 3, and that's a 56% higher return. That's the key to successful trading. Never stop loss trading. So this is what we preach, or you need to learn in your environment how to repair those trades when they go wrong. And things go wrong at times, absolutely. Look, we were going steep down, then 9 of the 12 federal banks started buying, and you saw my chart. It was indicated on a chart, short environment is over, get rid of your shorts, go long, and that's what we did. Yeah, trade finding is the name of the game to this. And so we have the opportunity to do trade finding through our NeverLossTrading alerts. Yeah, or you have own scanners in your system like top line and watch list indicators. The key will be that it's repetitive so that you can stay at least 80% invested. Those investors who are 10% invested, so you'll never come and make a good return. You'll have to take the trades the way they come, but you need to have an idea of where things are going so that you're not constantly on the wrong side of the trade. And I want to make you a little offer. Write me an email, subject stocks. I want to have your first name, your last name, and your phone number. Why your phone number? I want to talk to you, what you want to reach. And I send you a week of free stock alerts. Yeah, they will be in Excel. Yeah, so the Excel program lays it out, and I give you a little video to it with the introduction of how to read those. But then I want to work with you a little to see if that could be something for you so that you can execute those trades. So therefore, if you don't leave me a number, still send you a week of free alerts, but it would be favorable for us to have a talk to see if we can find something that can help you in the future. And so with our offer, yeah, we in our mentorships do the following. Yeah, we server install the software. It's on Thinkorswim from TD Ameritrade and in the future Charles Schwab. Data real time, that's important. Yeah, and it doesn't cost you a thing. Doesn't cost. Entry, exit, stop. Even so, if you want to keep your broker relationship, you have to don't have to fund your account on minimal, yeah, to have real-time data. Then you keep your entry, exit, stop, but you need to see at one chart of what's going on. Position sizing, yeah, absolutely important so that you stay in your risk tolerance. Time in the trade, yeah, because we define by the signal, is it 1 to 5 bars, is it 1 to 10 bars? When is the price move most likely at the end? And if it's at the end, then we'll need to make a decision. And risk handling, yeah, how that's the key of being a successful trader. Manage the risk, lose less than you are winning. And the business plan, clear cut, entry. So that's what we do in our joint work with our clients, one-on-one, best available times. We also work with you on a weekend, however it suits you. We want to make traders. Yeah, I trade every day. We want to make traders, and many people get independent very quick, but also we are very much in favor of keeping long-term relationships with our clients. So however you decide what it can be for you, because we want to put an end to this, that you guess. Yeah, past price oriented results of a couple of moving average things that match. It can be traded, but it's only 51 to 54% likely, and the probabilities will not put you ahead to be able to execute the trades and to run them through. Our systems constantly give you outlines of trades that you can execute. Yeah, so I just put 2 systems here on a chart, and you see frames in red go to the downside, momentum change, upside trades. So you have an idea. So am I in an upside or downside environment? You don't have to guess. You see it because you know blue up, red down, simple to see. What all the other things are, they are confirming indicators, but it's easy to learn. Sell, 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 buy, buy, buy. And with the basic system that we have on board here, you trade at a 2-candle setup here and a 2-candle setup to the bottom. Yeah, if that's something for you that I provided here in that meeting, then give us a call, 866-455-4520, or write us an email and to contact@NeverLossTrading.com, and we provide you with a personal hour. But let's not do a time waster. You're interested, do it. Take your time. We are not assuming that you buy right here after the presentation.
Hey,
Some of our
Thomas.
mentorships. Yes.
Oh, hey, that was a great presentation, by the way. Sorry to interrupt, but I want to make sure that you have a little bit of time for Q&A.
Yes, absolutely. Yeah, absolutely. Look, yeah, we have 7 more minutes. Yeah, sure, absolutely.
Yeah.
I'm here. Yeah, so therefore we have the top line we saw today. We had the trade colors, the entry-level system, and we add another indicator, the box. We give you a live demo if you contact with us, or sign up for our news, then you can stay with the newsletter. So now I want to take your questions. Yeah, so I'm open for your questions, please.
All right. Well, Roman earlier asked how much capital was in play. I'm not sure which part he was talking about, but.
Okay, look, the thing is, I don't want to always disclose it, but when 3% were about $3,000, how much capital was in play?
Okay. All right.
Hopefully that answered the question. Yeah.
Yeah.
And so that, yeah, so therefore there was, look, the thing is, it's easy when you go through the calculations. Yeah. So the capital in play was what? 100K. Yeah.
Mm-hmm. Cernivus asks, do you have similar verified statistics for the past 1 year, 3 years, etc.? High volatility due to the pandemic. Whoop, hold on a second here. High volatility due to the pandemic has been good for many.
Yeah. Look, the thing is, take it like that. Yes, but also I'm hesitant to always disclose every of those. Doesn't mean that I bail out of this one, but we are 10 years of business. We have a high price point for our mentorships. Look at the internet. If 100 people, if 5 or if none complain, then you'll find none, because we work with our people until it sticks. Yeah, so we say we work for 20 hours, but we work until it sticks. Yeah, and you need to make the trades too. If you buy the system and don't make trades, that's hard for us then to do. But if you make the trades, we'll help you on the horse and get through. The company is 10 years in business, so it's not that we are new and that we are like a 6-month show go, or that we just had that. But I definitely also have the statistics for all of last year. Yeah, definitely. And it was a good year. Look, last year was easy because we went up, so it was easy to go long and make trades. Yeah, and so we had similar results last year.
Mm-hmm. Dennis says, do you ever trade indices?
Yes. Yeah, we trade indices and ETFs too. Yeah, the indices you saw, for example, we had the ES on scope. Yeah, and we trade them also on shorter time frames. Just for today's presentation, I didn't want to go through 150 different charts. I picked out some, but definitely we trade indices. And you saw I put on charts for the SPY, yeah, which is the S&P 500 index or indice. And you could trade the SPX on it, or you trade the ES on it. You saw the QQQ or the NASDAQ 100. Yes, absolutely. Indices are good instruments to trade, highly liquid, and you can apply different strategies to those.
Great. John was asking, can we keep our own platform?
Yes, absolutely. But the thing is, you need to see the chart on one platform, and it's inexpensive because on TD or Thinkorswim, it doesn't cost a thing. It doesn't cost you any. And you execute. Look, we have clients that execute with Charles Schwab, with TradeStation, with Ninja Trader and their brokerage, with ING. So we have Fidelity. We have so many different users. We cannot translate all of our software always in every platform because not every platform allows, yeah, to make the programming. So therefore, you take your signal from one platform and you execute your orders where you are convenient, and you keep your broker relationships. Absolutely.
And Ken says, what are the worst case drawdown that these systems have experienced?
The worst case drawdowns depend of how many trades you take on, and if you repair them, as I showed you. Look, the worst months we had an attainment rate of 57% and 43 losers, but there were also small losers in it because the overall attainment was above plan. Yeah, the dollar attainment was above plan, and we had higher winners than losers. Yeah, so you saw that on the little statistic. The worst months had a 57% attainment rate. We go for 65, but in 5 months we were at 67 because, you know, 1 month we had a couple of shorts that we had to repair and turn around, but also we had a couple of longs that gave us the dough or the money that we want to make on this
one. Ken says, do you trade for your own account as well, or are you only a mentor or teacher?
No, I trade my own account. You saw I gave you 6 examples of trades that I did today. Yeah. Waste management closed. Yeah. And I opened up 4 more orders. Yeah. Waste management closed. Verizon closed. First Solar closed. Baidu closed. Eli Lilly closed. Yeah. So these were all closing trades. And also I opened up a couple of trades, and 2 I repaired. I rolled forward. Yeah. I rolled forward MU and Oracle. Yeah, and I opened another position in Amgen. Yeah, so look, we trade. This is not a book, and you don't learn trading by the book. This is why take the platform. There's other presenters. See the knowledge and what suits you, but trying to do it all on your own and being skeptical at every presenter. There are different styles. We try to give you a lot of knowledge and education and surely make our offer, but doing it on your own will be a challenge and a half.
All right. Well, thank you very much for your time. And I'm sure everyone got a lot out of that presentation. I'm going to, let's see, I guess I will mute you now. And I have the fortune here of introducing our next speaker. I would like to introduce Kevin Davey. Kevin is an award-winning teacher and the author. Oh, hold on a second. One second here. There we go. Let's get my screen back up here. There we go. Okay, so I'm very excited to introduce Kevin Davey, who's going to be our next speaker. Kevin is an award-winning trader and the author of multiple best-selling trading books. He's the inventor of the trademarked strategy factory approach to developing algo trading systems. So I think he's going to have a really interesting presentation that I think you're really going to like. And that said, I'm going to turn it over to Kevin.
Okay, thanks. You should see my screen, hopefully, and we should be ready to go. So I assume everybody can hear me, and so I want to thank you for joining me today, and of course, thank you to the people at Traders Exclusive for holding today's event. I really appreciate it. So my talk today is going to be on 4 entries you can use. And the interesting thing about this will be there's a little twist to what I'm doing. And that's where I think a lot of the value is that you'll see. And, you know, first, it's been a crazy few months for everybody. I hope everybody's getting back to normal with this coronavirus and everything. You know, it's funny, I haven't got my hair cut in a couple months, and I was thinking, man, my hair has never been this long. And then my wife brought up this picture from my high school graduation. So apparently my hair was still longer back then than it is now. But Yeah, so I thought I'd embarrass myself with that a little bit, but anyway, I hope you're all well. Hopefully you're all getting back to normal, and let's get started. You know, for the next 45 minutes or so, just sit back and relax. I'm not going to have a 45-minute infomercial. That's an insult to you guys. I'm not doing that. What I'm going to give you is no sales pitch and no special offers. It's just pure education. So you sit back, you're going to learn a few things. You're going to learn some new ways to develop entries for your trading, whether you're an algo trader and you want to program it, or maybe you're a discretionary trader. You're going to figure out some new ways to do things today. So just sit back and relax and realize, hey, there's no pitch coming. There's no special offers. You know, I'm not going to show you a lot of stuff that's hidden. I'm going to show you pretty much everything as it is. So first, don't trade with money you can't afford to lose. Past performance is not indicative of future results, and treat all results you see anywhere as hypothetical. Unless it happened in your own account, treat it as hypothetical. So the charts I'll be showing today, treat it as hypothetical, and then you'll be much better off. Trust me on that. So my goal today is really to give you 4 entries, and it's really not so much about the entries, but it's to get you to think a little bit differently about entries than you may have. You know, everybody's got a lot of the same entries, so I'm trying to give you some unique little twists on what some people would consider just traditional entries. So, and that's where the real value is today. There'll be a ton of stuff you can go off and test yourself. So first, I'm just going to give you a quick intro of myself for those of you who don't know me. I'm guessing a lot of you already do. Then I'm going to talk about the quote-unquote magic entry. Then we'll jump into those 4 entries that I think will help you stand apart from the crowd. You know, you don't want to be doing what everyone else is doing. And these 4 entries with the little twists I put on them, which I fully disclose here, will help you with that. And then we'll talk about some next steps, and then if we have time, we'll get into Q&A. If we don't have time, I'll have my email address at the end. You can feel free to send me emails, okay? Because we have a lot to get through, a lot of information today. So real quick, 30 years trading experience. I've won trading contests. I finished in first place 1 year, second place 2 years. So 3 consecutive years I won a trophy. And that was a real-time, real money contest. I have 4 best-selling trading books. I've also been able to teach a bunch of trading champions. I'm at 6 right now. And I've also had a whole bunch of strategies, over 300, that have been developed by students. If you subscribe to Technical Analysis of Stocks and Commodities magazine, you'll see my monthly column. It's called Algo Q&A. And if you have questions, I'm always looking for article ideas, so please send them to me. And speaking of that magazine, every year they do a Reader's Choice Awards. And last year I was fortunate to finish first place in the favorite article from 2019 section, which was pretty neat. And I also finished in 3rd place for my trading course. And what's interesting there is the groups that beat me were Thinkorswim and TradeStation, which, you know, they're a lot bigger than me. So that was pretty cool. I finished just behind those guys. So just my books real quick. One has been a bestseller in the futures arena for the last year, pretty consistently, but in case you're interested in my books, I won't dwell on that. But let's talk about entries. So here, I just Googled trading entries, right? And you can see 51 million results. Like, wow. People love entries, right? And then you can see a couple smiling faces of people sharing entries, the best Forex entries, top 3 day trading entries. everybody's always talking about entries. And you might say, well, why? Well, there's a good reason for it. And I'm going to talk about that in a minute. But even if you go to my YouTube channel, if you look at my top videos, 6 of the 7 are on entries. And I have a lot of other stuff that's free on YouTube, yet people are just really attracted to entries. So entries are a big deal for a lot of people. And there's a couple reasons why. One, I think, is the control, because people like to feel in control when they're trading, right? And so if you're not in the market, you can tell yourself, well, hey, if the market does this, if this indicator says this, if this pattern occurs, then the market's doing what I want it to do. So therefore, it's a good time to enter. So you kind of feel in control. That's a big thing with entries. You only pull the trigger when you feel in control. And the other part of it's ego for a lot of people, which unfortunately leads to the downfall of a lot of traders. But to say you picked the top, hey, that's pretty cool. I had a friend who once there was a stock market, a little crash or something, and I hadn't seen him in a while. And the first thing he said when I saw him was, oh, hey, I sold right at the peak. Of course, he wanted to sound big, but people's ego gets in the way. He's like, oh, I timed it perfectly, and I sold short right at the peak. Yeah, okay. So that's one of the things with entries. But the problem is entries are only a part of the puzzle, okay? You've got exits, you've got diversification, you've got trading psychology, money management, position sizing. I've probably missed a few things here, but these are some of the big ones. But entries are only a part of it. You can have the best entries in the world, but you can mess it up if you have bad psychology, or you can certainly mess it up if you have bad money management. So that's what you got to remember. It's only part of the puzzle. And a lot of people don't fully grasp that. The second problem with all these entries and people wanting to time the market and everything, there's no perfect magic entry. It just doesn't exist. So people will spend a lifetime looking for this. It kind of reminds me of, 1,000 years ago when people tried to turn lead into gold and those kind of things. People are looking for this great solution. It doesn't exist. There is no universal way to enter a market that works on every time frame all the time. And yet you will see people selling those kind of things. Oh, I've got the best indicator. This predicts everything. Just forget that those things exist, because they don't exist. People will tell you they exist, but there is no magic one-size-fits-all entry. But there are little entries you can do to actually help out your trading. Problem number 3 is almost everybody's doing the same thing. Back 10, 15 years ago in algo trading, it was called mechanical trading then, or system trading. Not a lot of people were doing it. Now, pretty much anybody can do it. It's so easy to throw an indicator or a price pattern on a chart and run a back test. So what do you think happens when you've got 1,000 people finding the same pattern that works? Well, what they'll do is they'll probably start to trade it, and then the edge will go away, because then people will jump in front of it and they'll try to beat everybody else. And almost every entry out there eventually kind of loses its effectiveness. So when everybody's doing the same thing, when they're using standard indicators, standard patterns, when they're looking at a single market, when they're using regular bar sizes, regular charts, they're going to get the same results as everybody else. And what's that? Well, hey, this is a zero-sum game, right? Especially with futures. For every dollar I make, someone else is losing a dollar. And in the long run, most people lose. And partly it's slippage and commission, just trading costs, that kind of thing. But you don't want to be doing what everyone else is doing. And that's kind of what I'm going to talk to you today about, doing things differently. So just to give you an example, who has not done this? Who's ever tried any kind of algo trading or any kind of rule-based trading? Triple moving average, when the price closes above the 4-period moving average, and that's above the 9-period moving average, and that's above the 18-bar moving average. Those are the standard values. Buy, and you can see there's a buy there. Almost everybody does that and who has tried that. And over time, if it ever was effective, it's just not effective anymore. But doesn't mean people don't try it. But that's what you want to avoid, doing what everyone else is doing. So that's what I'm going to reveal today. They're basic entries. There's really nothing too special with the entry themselves, but the way I'm using them is going to kind of set you off and set you thinking, oh, hey, I can test a lot of things that are in my library and just do it a different way. Because my theory is by being unique, you can stand apart from the crowd. And that's what you want to do. You don't want to do what everybody else is doing. Think of all the newbie kind of traders who, when there's a moving average crossover, they buy. You don't want to be joining them, right? You want to do something different. So these 4 entries with the little twist, my estimates, and this is based on looking at thousands of strategies that I've developed, that people I've worked with have developed. Probably less than 10% of people are going to use idea 1 I'm going to show you. 5 to 10% are using idea 2. 2 to 5% are using idea 3, and probably less than 1% are using idea number 4. And actually, of all the traders I've ever worked with, only 2 have ever used idea 4, and that was by accident. So almost nobody's using these things, and that's what makes them powerful. Okay, so, and again, I'm kind of building up to this, but I want you to understand the power in these things. You could take some of your existing entries and probably quadruple the amount of strategies you now test. So if you wanted to test a moving average crossover, let's say, you could do it 4 new ways now. So you could literally turn one strategy into 4 different strategies. And what's nice about that is you don't have to invent more patterns or more indicators. That's one of the biggest issues I see people have trouble with. They'll say, oh, I have no ideas. I don't know how to do it. Well, right here, I'm saying you can take your standard ideas, put these little twists on them, and you could probably get 4 times the amount of tests done. And if you've been algo trading for a while, you know it's all about developing strategies, developing new strategies. That's kind of the lifeblood of what we do. So to help me out, I'm going to use some software. It's called multi-op software. It was actually created by one of my students. It's an advanced testing and what I'd call a rapid prototyping tool to help you with build strategies. So that's what I'm going to use here. I'm just going to show you the results, but people always ask, how'd you do that? And that's how. So let's jump into it. Enough of the chit chat of what I was going to talk about. Now let's actually do it. Okay, so the first one, a double momentum. Okay, market's headed down, long term, pulls back short term, then you go short. That's just a standard double momentum pullback type approach. long term's down, short term's up, then it's a good time to go short, okay? I'm sure you've probably done something like that. Nothing really unique here, but here's the twist. I'm going to trade crude oil, but I'm going to do the signals off of the mini S&P. So I'm going to calculate that dual momentum on ES, and I'm going to execute on a completely different market, which is crude oil. You know, 90% of people who go and test this would test it on crude oil because that's what they're trading. So I'm saying, no, test it on a different market. Apply the signals to crude oil. So I gave that example. Another example would be like, hey, if you're trading gold, maybe use 30-year bonds to generate your gold signals. It's just something a little different. And I'm not saying this is a brand new idea. You can go to John Murphy's book and probably learn all about this intermarket analysis, where you look at different markets to figure out to trade your target market. But the fact is, very few algo traders I've ever seen do this. And I think that's where the value is. So there's definitely this value in being unique, and this is unique. Here's some sample code, and you can see if you're a TradeStation user, you'll understand it. If you don't, I apologize. But what I actually did here, this code just shows you if I was using it as crude oil, and I'm getting the momentum signals from crude oil, because I say close of data 1 and data 1 everywhere here. So if I just change this to data 2, you know, and everywhere I see a data 2 or a data 1, I'm sorry, and I switch it to a data 2, then I can use a different market's data stream to give me the signals. I would still execute on data 1, which is the top one, so that's where I take the trades, but the signals would come from somewhere else. So that's kind of what I'm talking about here. Whoops. And let me erase that. So here's an example. This is the crude oil chart I showed you earlier, and this is using the mini S&P, and I just put a simple exit after a certain number of bars. I didn't optimize it, so you're not seeing what I would consider something you can just go and trade tomorrow, but it's a good start, it's a good entry, and it's a even better idea that you could apply to just about any market pair you wanted to. Hey, maybe soybeans influences wheat. Does it? Well, you could test it and see, and that's all what algo trading is, right? We test things to see what works and what doesn't work. So that's kind of what that one looks like. Okay, so moving on to number 2. This is a double momentum, so the same kind of setup, but now I have an RSI filter added in, and I'm only going to go short if the RSI, the 14 periods RSI, is below 50. If it's above 50, that would be for a long trade. Okay, but again, it's just that standard pullback. So it's standard pullback with the RSI as a filter, and then I'm going to put another unique twist on it. And again, I'm not saying this is revolutionary, but what I am saying is very few people do it. And in this case, what you do, and maybe you've done some of this on your own, but a lot of people, most people don't. I'm trading the euro currency, 360-minute bars, but I'm basing the signals off the daily bars. And actually, what I'm doing here, and you'll see it in a second, I'm calculating the momentum on the daily bars, and I'm calculating the RSI on the 360, and that's why I'm executing it. So it's kind of a mixed bag there. And again, I'm trying to be unique, and that certainly helps make it unique. And again, that's just some words of what I'm doing here. You're just using a higher time frame to generate the signals, and then you're executing on the lower time frame. And the point is, very few people are doing this, and that's where this value is. If everybody was doing this already, there probably wouldn't be much value in it. So, and I'm not saying people won't be doing this 5 years from now or 2 years from now, but right now, not a lot of people do this. So here's some sample code, and you can see I have data two, so I'm calculating momentums of data 2 here, and then I'm doing the RSI, and you don't see data 2 here, so that defaults back to data 1, which is my 360-minute bar. So you can see I'm using both to generate the signals, which is definitely not that common. Not a lot of people do that. And if you look at it, yeah, it's this one's kind of flattened out recently, although it still just made a new high. It's not the optimum result. I try never to show optimized results because they're just misleading at the very least. You don't want to rely on optimized results. So this is not an optimum result, it's just a pretty representative case. So that's number 2. As a bonus, you can combine those, right? So if very few people do number 1 and very few people do number 2, how many people do you think do 1 and 2 together? Probably nobody. You know, so for example, let's say you want to trade 60-minute crude oil bars. Well, maybe you do your signal off of 360 minute gold bars. I mean, that's like, you know, totally mind-blowing that you could do something like that, but you can with most software. Maybe not all platforms do it. TradeStation, which is what I use, certainly you can do it. You can do different time frames and instruments. It's pretty cool. So right there, you take whatever strategy you have, try doing it with 2 markets, try doing it with 2 different time frames, and try doing it with different markets and different time frames. I mean, you could be testing for days just your baseline strategy on different markets and combinations. See if it works somewhere. That's what it's all about, right? Is finding out what works. Okay, so going on to number 3. Now I'm going to use double momentum with an ADX filter. And what I'm going to do is I'm only going to take, the ADX is the average directional indicator. I got the name wrong, I know, but Wells Wilder developed it. And basically, if it's above 20, that's supposed to suggest a trend mode. Below 20, it means kind of flat, volatile, or not volatile mode, but basically a flat mode. So I'm going to do the double momentum with this ADX filter. So again, these are some filters that I've actually used on quite a few strategies that I've found some benefit. I don't use them all the time, but sometimes you can filter out some of the really bad trades with either RSI, which I used previously, or ADX. So again, same sort of thing. It's that pullback. But the neat thing here, I'm going to use a weird bar size, 128 minutes. How did I come up with that? Oh, I just picked it. There's really no rhyme or reason. You know, maybe you might say, oh, I'm going to do some Fibonacci type numbers for my minutes. Well, go for it. You know, you got to test it. It might work, it might not. But the idea here is a lot of people use 60-minute bars, 240-minute bars, 120-minute bars. You know, they use standard type bars. And when you use weird number bars, weird minute bars, You're going to get different indicator values. You're going to get different patterns. If you're into candlestick patterns, that kind of thing, you're going to get something different. And maybe there's a couple times a day where you're in front of everybody else, or you know, you're just going to be doing things a little bit differently. So I know with MetaTrader 5, for example, and that's big with Forex people, they've kind of gone to where you can customize the minutes. But I know MT4, there were only like 4 or 5 choices for minutes, right? You could do, I think, 15, 30, 60, maybe 120, maybe 240, I know 240, but you couldn't do 128 minute bars. At least you couldn't do it easily. So there's a ton of people out there who don't even think about, oh, hey, I'll just use a 60-minute bar. I'll just use a 120-minute bar. You're doing something unique. And again, the idea is being unique is what can set you apart with some of these entries. You don't have to worry about 10,000 people entering the trade right when you do, and you get more slippage and all that because everybody's entering the same time as you. You're going to be entering different times, and that could work out real well. And like I said, all the indicators and patterns are going to be different. And as I sound like a broken record, very, very few algo traders are doing this. You know, like I said, I've seen thousands of strategies of people I've collaborated with, and very few have these weird times to them. Most are just standard, and that's where the value is. So again, the code isn't what's really important here, but you see it's just, I'm just using simple momentum, and I'm only using one data stream here, and then this ADX filter, and it tells you to buy. Pretty simple, but at least you can screenshot this code, and then you can type it in, you can go run with it. Here's a sample case. And again, it's not the optimum result. I don't want to tell you, hey, go and trade this. Although, you know, over time it's done pretty well, but there was really a long flat period. But the point is, it's something a little different. All right. So we've got one more, and then looks like I'll probably have some time for some questions. So if you have some questions, you know, feel free to share them. I'll try to get the ones I can. Here's another unique entry. This is the most unique one, and I don't know if non-TradeStation users can use this easily, but if you use TradeStation, this is potentially a gold mine of new strategies you can develop. Okay, so it's just going to be a dual momentum with this time I'm going to use a long-term moving average. So I'm going to say, hey, you know, enter on this pullback only if the close is below the 50-bar moving average. So, you know, I don't show it here, but for this to be valid, you know, maybe the 50-bar moving average looks like this. Okay. So that is how that particular entry would work. And let's see here. Let's kind of move on. And here's the twist. So look at the chart on the left and look at the chart on the right. They're both lean hogs. They're both 120 minutes. They're both the same exact time frame, yet they look different. And, you know, depending on what you're looking at here, they're really different. You know, the one on the right is this huge green bar. I don't see it on the left. You know, the gap here is bigger. There's a lot of different things different here. And why? Yeah, it's the same chart, right? It's all on how you build the bars. And in TradeStation, when you're using a certain number of minutes to build a bar, you have two choices. You have what's called session hours, and you have natural hours. So by default, it's session hours. So if the market opens at 10:30 in the morning, and you have a 60-minute bar, that first bar is going to be from 10:30 to 11:30. It's a session hour, okay? But if it's a natural hour, it will start a new bar at the top of every hour. So it'll start one at 11 o'clock, at 12 o'clock, at 1 o'clock. And you'd be amazed how different systems will be when you do bar sizes, the bar building differently. I've seen systems look great with session hours and look terrible with natural hours, and vice versa. You get completely different results. It's as if you're testing a whole nother strategy. And it's not the strategy you're testing, you're just testing on a whole nother data stream. And like I said, I've been using TradeStation 16 years. I've seen 2 people do this, both people I was collaborating with, and they didn't even realize they did it. Because I was trying to duplicate their results. I was using session hours, and I'm like, I'm getting way different results. And it took me a little while, even after the first time. You know, you'd think I'd learn, and then I saw it again, and oh yeah, it's this natural hours thing. Great way to be unique. So right there, hey, just switch your natural hours and session hours with all your existing strategies, and now you've got a whole bunch more stuff to test. Pretty cool. Again, there's nothing special about the code. You can see it's just a dual momentum, and the close is greater than average. There's a typo there, but here's how it's different. Here's a sample case with natural hours on the left and session hours on the right. So the natural, and neither of these were optimized. It's the same parameters though for both cases, but you can see the natural hours about $40,000 profit, session hours about half that, with roughly the same amount of trades. But man, if you had your choice of which one to trade, you'd definitely go with the natural hours. But again, that's, nobody's using natural hours. Most people just use the default, and they use the default in a lot of different things. But natural hours is a kind of a neat way to do it. So to kind of sum up, I'll give you the bottom line first. I've shown you some things that work, but it's up to you. You have to try them yourself. And any good algo trader will never take something somebody says and just immediately start trading it. Good algo traders will test, and they'll evaluate, and they'll have a good strategy development process to make sure that they actually have a strategy that's worth trading. And hopefully that's what all you guys who are algo traders out there will do. And even if you're a discretionary trader, hopefully you'll do some kind of verification to say, oh yeah, Kevin knows, he was telling me the right thing, or Kevin's, oh, he's a goof. He doesn't know what he's talking about. Go and test it. That's the way you prove it, and you give confidence. And that's huge in trading. Remember I mentioned earlier the puzzle with psychology. Having confidence in what you're developing and what you're trading is huge. So I give you 4 entries. I've showed you, at least a sample market of how they work. They're simple, they do work, and maybe they work because I used them in unique ways. Maybe these would work on a normal single market with regular hours and a standard time frame bar size. Again, that's left to you to test. But hopefully you've kind of walked away today with, hey, I can see some value in doing something unique. And I'll tell you, with all the competition out there, that's what you want to be doing. You want to be doing things that other people are not doing, whether it's what you're testing, how you're testing, your ideas you're coming up with. You want to go a step beyond. You don't want to be with the crowd. So more info, there's my website in case you're interested. Like I said, there's no special offer, there's no sales pitch, no nothing. There's a ton of free info at my site. If you want, go to it. If you thought I was full of it, don't go to it. As simple as that. So it looks like we have a 7 minutes or so, so we can do some questions. If you have a question and it doesn't get answered, or if you you think of it afterwards, send me an email. There's my email address. I love talking to traders. I answer all my emails. I'm not one of these people to ignore your emails. I will answer you. So with that, we'll see if there's any questions.
All right, Kevin. Let's see here. We do have some questions. PK says, how do you measure short or long-term momentum?
So momentum is just the difference in closing prices. So take your close today, take your close 5 bars ago, and if the close today is higher, then your short-term momentum, your 5-bar momentum is up. If today is lower than the close 5 days ago, your short-term momentum is down. So short-term, I usually use 1 to 5 bars. Long-term, I think I was using 20 or so bars roughly. And that's how you measure your momentum. You just compare the prices.
Excellent. Tan says, regarding the Strategy Factory workshop, will you repeat the concepts of ideas 1 to 4 again, or will you also elaborate on more ideas?
Yeah, I don't really want to talk about the workshop, but
okay.
That's probably a question better to send me via email. We can do it one-on-one. But this is what I've talked about today is really just to help anybody who's looking to algo trader. So it's not specific to my workshop. It's not specific to anything. It's really just for any algo trader out there.
Excellent. We have a gentleman, whoops, that same thing happened last time. We have a gentleman asking if he can get the PowerPoint.
Yeah, just send me an email and I'd be glad to share it with you.
Excellent. Ken says, how do you attribute success to the entry versus the exit?
Well, it's, I mean, they're both important. And, the key is to test them together, because you can test entries by themselves, you can test exits by themselves, and you might get different answers on what's good and what's not good. But really, at the end of the day, at some point, you've got to test the entries, whatever you're doing, with the exits, whatever they are, and run them through some detailed testing, some robust testing. And once you do that, then the results will actually tell you, hey, this is a strategy worth trading, or no, it's not. And you might not know, oh, is it my entries that are messed up? Is it my exits? You might not know. You'll just know that the end result is not good. But definitely the way to see what's valid is to do a lot of testing.
Excellent. And Neil says, hi, Kevin. How do you choose what market to make data to relative to what market you're trading?
Well, there's one, that book I showed by John Murphy earlier. It would probably be a good one because, I think he reveals, and there's other books out there too, by the way. Those kind of books reveal that, hey, sometimes, the 30-year treasury bond is leading. It can help you get signals for the stock market as interest rates go up and down. I don't know how good that would be in the last 10 years when interest rates have just gone down for the most part. A lot of it's just trial and error, but maybe thinking about it. Like, for example, I wouldn't necessarily think that soybeans influence gold or can be an indicator of gold, but it might be worth trying and see. And again, it's one of those things where you maybe put an educated guess that, hey, maybe silver and gold would be a good combination, one for the signal, one for the actual trading. And I'd kind of look at it like that.
Excellent. And Charles says, are you using momentum to avoid the lag of moving averages?
Yeah, I mean, that's one of the benefits of it, because, you know, moving averages obviously lag. But the way I look at it is, I'm in Cleveland, Ohio, which is in the middle of the US. West of me is Chicago. Further west is LA. To my east is New York. So if let's say I want to get a train, go from Cleveland to Los Angeles. So I get to the station at Cleveland. Am I going to hop on a train that I see headed towards Chicago, heading west? Or am I going to hop on one that's heading east to New York? Well, I'm going to hop on the one heading west because that's where I want to go. And that's what momentum helps you do. You get in a trade in the direction that the market's already going. You know, the other way to do it is to try to, oh, hey, I'm going to hop on the train to New York because I think it's going to stop and turn around and come back the other way. You know, that's a top or bottom picker. And I think that's a lot tougher to do. You know, you're saying, hey, the market's got to turn around. I like to go in the direction it's already going.
Yeah, great analogy. I like that. Charles asks, if you test 20 algo systems, how many should one expect to be worthy of trading?
0.
Huh.
Probably, I always tell people, expect to test 100 to 200 combinations of things before you get something. And real quick, I'll just type in what I mean by that. So you have your strategy code plus your market plus your bar size, and all those 3 things combine to make a unique, quote unquote, system, right? You could have the same strategy code applied to 10 different markets. So when I say 100 to 200, it's 100 to 200 combinations of those 3 things together. You have to wade through a lot of garbage, and it's actually a good thing.
All right. Well, excellent. First, I'd like to say thank you very much, Kevin. That was a great presentation. Thank you very, very much for joining us.
Thanks.
All right. Let's see here. I'm going to take back control here. Okay. So, someone was asking in questions. They said, let me just pull that up. Will you make the session available on YouTube so we can rewatch it? Actually, Lars, we record all of these. This is being recorded right now, and the recording will be available on tradersexclusive.com. So never fear, we're here. Next up, we have Brian McAboy. Let's see that Brian is here with us.
Yes, I am.
He is. That's great. Now, let me tell you a little bit about Brian. Brian is with Inside Out Trading. And what he says is nothing else really matters in trading if consistency is missing from your trading. Brian's background is in quality engineering. Brian's background in quality engineering gives you that consistency and the confidence to easily stick to your system. And with that said, Brian, I'm going to turn this over to you.
Okay. All right. Let's see. So can you see my monitor here?
Yep.
There we go. All right. All right. Very good. Yeah. And so, you know, this, as far as consistency, I mean, this is one thing that I've really enjoyed teaching to traders over the years. I've been doing this for 14 years. And the consistency, really, that's the bottom line. If you don't know how to be consistent, you can have the most clever strategy in the world, but if you can't make it consistent, then it's all for naught. So that's what you're about to learn. And the cool thing about it is this is a skill. This is not just, you know, discipline and willpower. there are ways to make consistency happen without that, where you don't have to rely on it. And that's what you're about to learn about. So let's go ahead and get started.
I'm glad you're here, and welcome to the Science of Consistency Applied to Trading. So it's brought to you by me, Brian McAboy of Inside Out Trading. And we'll just go ahead and jump into things here. I say that I'm glad you're here. The reason I am is you're about to learn the one thing that nobody else has been able to teach you in your trading career, and it's crucial. And that's a specific process to trade consistently in a comfortable and sensible manner without relying on discipline or willpower, and regardless of what you trade or the method that you use. This is all about consistency in and of itself. So the reason this matters, this is arguably the most important aspect of your trading. Without a means to be consistent, you leave thousands of dollars on the table that should be in your account. You miss out on profits that you should have, and you incur losses that you should not. This is critical to everything else. It really is. I mean, you can have the best computer set up, the best data feed, the best platform, the best system, the best everything. But if you don't have a process to be consistent, then none of that stuff, really, it doesn't matter. Now, how does inconsistency show up in your trading? Well, every time you fail to do what you're supposed to do, when you're supposed to do it, and every time that you do something you shouldn't do, or more specifically, every time you hesitate and miss out on a trade or you get in late, every time you get out early and then watch the market run, every time you stay in a trade too long, turning a winner into a loser or a loser into a bigger loser. I mean, every time you deviate from your system, that's an inconsistency, and it costs you in both money and confidence. Now, the problem here is, I mean, you know what you're supposed to do, but actually doing it consistently, day in and day out, week in and week out, this is where it gets so costly that it often keeps many traders from ever making it. And it's usually why traders finally give up defeated. And that's what we're here to fix today. So if you've been trading for any length of time, you know how trading works and how your system works. But you're also aware on at least some level that you've been missing a critical piece to the puzzle. And that is a clear and workable process to be consistent so you can trade free from doubt, anxiety, and fear. I mean, those are the things that mess with you in the middle of a trade, are the doubt, anxiety, and fear. So the science of consistency actually is science. And today, right now, you're going to discover that you can enjoy the consistency you desire, trading in a comfortable and relaxed manner without relying on discipline or willpower or fighting with your emotions and without having to drudge up and deal with a lifetime of issues on a therapist's couch. Now, why should you listen to me? Well, for 24 years, the last 24 years, in a variety of capacities, my focus with my occupation has been on consistency. I'm a mechanical and a process engineer. I'm also a certified quality engineer. I'm a business coaching consultant, and I've been helping traders overcome issues for the last 11 years, psychological, functional issues, business issues, all sorts of stuff. But for over 11 years, I've been working with traders one-on-one and in a variety of ways, brokers, also with other trading educators. So a lot of people I've worked with, individuals to professionals, like I said, the whole gamut. Now, including, and there's like a comment from John Foreman, who's a professional market analyst, professional trader. He talks about how with my process engineering, then I do bring a completely different way of trading than other educators. And so, yes, you will get to see a whole new angle of it. I'm kind of a little bit short because I think do need to compress the time. Anyway, the other reason that I'm glad you're here, seriously, it breaks my heart every time I get an email from somebody saying that they wish they had found this sooner, that they know that what I teach would have made the difference for them, but it's too late. They've already blown out their account, and now they have to quit. But see, you're here right now, and that's excellent. That's the reason that I'm glad you're here, because it's not too late for you. So what's possible with what you're going to learn here today and my teachings in general, instead of months and years to get where you want to be, we can get you there in days or weeks. Because I use a real-world approach. Again, I'm an engineer and a quality engineer, and so my focus is on what works. Forget theory, forget talk, forget claims. It either works or it doesn't. And the nice thing about this is, when people work with me, they enjoy freedom from self-blame and guilt. I remember my early days of trading before I got my feet on the ground, got my head wrapped around it. I felt horrible about myself the whole time. Not only did I feel bad about the way my trading was going, but I was feeling like a loser. It's like, I've been able to beat most everything else in my life. I just can't seem to beat this. And I got tired of feeling lost all the time. And what you get is you get freedom from that. You get to leave that old experience in the past. And the other nice thing is you get a renewed optimism about trading. Instead of feeling jaded and wondering if anybody's making money, you can actually see, okay, yeah, this is how you make it work. And that's cool. So if you've ever wondered, yeah, what is it about trading? It seems so simple. Why is it so blooming difficult? Then you're in the right place. If you're tired of not knowing how to fix your trading, you're tired of struggling with discipline issues. I've had people come to me, they've been fighting with discipline issues for 5, 8, 10, 12 years. Still haven't been able to get past it. So if that's you, you're in the right place. If you know that you have a decent system, but you just can't shake the lingering doubt when you go to trade. And if you've had your confidence shaken and you want it back, then definitely you're in the right place. Now, the fact that you're here, you signed up for this and you're here attending this right now, what this says about you is, first of all, you're serious about making your trading a success, and that's cool. It also says that you're also interested not just in collecting more things, more shiny, objects, but you're interested in the understanding the importance of developing yourself as a trader. This is crucial. The other thing is that it says about you that you're here is you've made it this far. You've actually survived this far. A lot of people don't make it as far as you have, and that's cool because that means you're not a quitter. You're a survivor. You're going to keep after it until you make it work, and that's cool. Now, what we're going to cover today, we're going to cover a few very commonly held misperceptions that hold you back and keep you from moving forward. This is crucial in order to make progress. You're going to find out what the science of consistency is, where it comes from, and how applying it lets you be okay. One of my favorite questions to ask people is, how do you define being a success as a trader? The answer I'll get, and it's often kind of a caution answer, is, well, when I get profitable. But then when I dig a little deeper, I always get to the same answer. And really, you've made it as a trader, not when you can get profitable, but when you can go to the markets and you know that you're okay. That's when you've made it as a trader. When you no longer have this fears and doubts, that's when you've made it. I think I've been there myself where, yeah, you can be profitable for 2, 3, 4 months in a row, but you're still, man, you're just nervous. When you've made it is when you know you're okay. And that's one of the things that we're going to cover today is how to get to that point. Also, the other thing about consistency is how you maximize your profits and give yourself peace of mind, and that's cool. So understand though, without knowing this, without being able to, again, having a process for consistency, your struggles will continue because this is critical to every aspect of your trading, you being able to perform consistently. So we've got a short time, it's even shorter now. We've got less than 45 minutes, so make sure you pay attention. Now, I am going to give you as much as I can in this time. We'll save the questions for the end. Hopefully we'll have a few minutes for questions. If you want to take this further, I'll show you how. Yes, I do have an offer for you at the end of the program. If you want to carry things further, you like what you find out, that's fine. If not, I know that you will get good value out of the time that we have together.
Hey, Brian?
So, also, I have an extra reward for you for being here.
Brian?
Yeah, what's up?
Hey, I'm sorry to interrupt, but a couple of people are saying the audio is not, the audio is not very good. Is there, maybe you can move the microphone a little closer or something, or?
Yeah, let me see what I can do. I also got a little bit of background noise. I got construction going on next to my building here, so yeah. All right. Let's see if this will help things here. I'll go ahead and get it picked up. All right.
To the end of the presentation.
Are you playing a video?
A gift for it. It's called the Trading System Profit Potential Calculator.
Yeah, actually, I had to do this. My allergies been acting up real bad today, and rather than get into the middle of the presentation and just get interrupted a bunch of times, I'm using this for part of it. So it's a mix of recorded and live. It's just because of my allergies. I just, like I said, I don't want to get in the middle of things and have like a 5-minute, sneezing and coughing spell. So for the quality of the presentation, that's all. It's the same presentation.
Yeah, the audio and the video is not super great, but I guess if it's not going to go on much longer, that's cool. Okay.
All right.
You really like this. It'll tell you to the dollar what the profit potential is for your trading system or any system you want to consider. It's a really cool tool I made several years ago. Simple. You'll like it. It's neat and it's free. It's my gift for you. So another thing that I know about you, you have goals. It's never about the money. People don't want money for the sake of having money. You've got people in your life that you want to support and provide for, have a better quality life, whether it's your family, your spouse, your kids, grandkids, church, whatever. You're wanting to do more, you're wanting to do something with your trading that has purpose. So you're doing this for more than just you. And I totally admire and appreciate you for that. So just know that up front. I do this because I know there are a lot of good people that get into trading. So you want to, and my goal is to help you get where you want to be with your trading so that you can do the good things you want to do and avoid the heartache and anguish that are so common in trading. So That's why I want to help you make it. Now, understand something. In this struggle with consistency, I'm going to shift gears just a little bit. You are not alone. You're really not the only one having consistency as a major issue. I mean, it's the #1 issue for most traders, but really it's even bigger than that. Consistency is the foundation of success and a primary determinant of profitability for nearly every single business on the planet, not just the trading industry, everybody. But if you think about it, you got service businesses. And for them, inconsistency means wasted time, lost customers, damaged reputation, and of course that makes other things more expensive. For businesses that sell goods, inconsistency means downtime, scrap, rework, chargebacks, returns, customer claims, and as well as all the other costs that are the same for the service providers. Inconsistency is huge. I mean, think about it. If you go to a service provider for whatever it might be, whether it's professional services or anything, if the quality of their service is hit or miss, one time it's great, the next time it's a bit disappointing, it won't take long until you're finding another provider. So it costs them that they're not providing you consistent service. Same thing goes for goods, whether they're consumable or durable. If the quality of what they deliver is inconsistent, it costs them all sorts of ways. Now, this is a key for everybody, for all types of businesses, not just traders, but especially for traders, because inconsistency comes straight off the bottom line. It's a direct cost, as well as contributing to many other indirect costs. So let's take just a minute. I'm going to slow down just a second, and let's take a look at how much it's costing you right now. I developed this a while back, and this used to be part of my job as a quality agent. I've got a rule of thumb for estimating how much it's costing, and it's a pretty accurate estimation. What you need to do is just take whatever 1% of your account is for the average cost of an erroneous trade, then estimate the percentage of times that you don't follow your rules. And the easy way to do that is say, well, all right, so maybe out of 20 trades, like 5 of them, I'm not really sticking to my rules. I fudge a little bit, or maybe I'll make a big boo. So you can figure out the percentage and then estimate the number of trades you place in a year. So if you're trading, placing 1 trade per day or trading day, it's about 250. I mean, you just multiply all 3 of these numbers. So let's take a look at an example. And again, you can like I showed you the formula. You can run this for yourself, and you can see exactly what the direct cost is. If you got a $25,000 account, and again, you're trading, let's say, an average risk of 2% on any given trade, that's $500 you're risking. So at 1%, it's saying an average error costs $250. That's reasonable. Some trades, the script's going to cost you $500, sometimes less, sometimes more. But 250 is a reasonable number to use. Out of 50 trades, let's say you're deviating on 10 of those. You're not sticking to the rules completely. You fudge it here, there, you hesitate, you move your stop, whatever. That's 20%. And if you're, again, placing 1 trade per day, so that's 250 trades a year. Here's how the math breaks out. So $250 times 20% times 250 trades a year. That's $12,500 per year. That's a direct cost of the inconsistency. That's money that should be in your account, and it's not. That's missed profits and losses that shouldn't have happened, but were there because of inconsistency. Now, that's a big deal by itself. The indirect cost can be even bigger because you got all that lost time. Time is huge. You have the lost compounding opportunity. Instead of that $12,500 being in your account, it's not there for you to work with and build on further, so you're not growing your account the way that it should. Well, the worst things that can happen is every time you make a mistake that you know you shouldn't make, you lose confidence. It hurts your integrity. That increases your doubt, self-doubt, doubting your system, doubting everything. And of course, the anxiety, because now instead of dealing with knowns, since you're not doing what you're supposed to do, that just furthers the anxiety, because now you don't know what to expect. And all this does, all these things reinforce your fears that you have to deal with in your daily trading. Okay, so this is on the negative side. We're going to come back to this in just a minute. Now, before we continue, it's really important to address misperception. And one of my favorite quotes, I used to have this on the QA lab where I used to work, because it's so true. The problem ain't what we don't know. It's what we know. It's what we think we know that ain't so. It's an old quote from Will Rogers. And basically says, if you believe something and it's incorrect, it's going to prevent you from thinking correctly, and that's the big problem. It keeps you from the solutions that will let you move forward. And here's what I'm talking about. A lot of times people come to me and I say, Brian, I'm fighting hesitation, I'm staying in trades too long. Here's the things that are going on, and what I need to fix is me. Now, here's the thing. In one sense, when you say this to me, you're right. Yes, you as you are right now, you're not going to make it, because if you were the trader that you needed to be right now, you wouldn't be having the problems. But so that in and of itself, yes, as you are right now, you do need to fix something about you. Something's got to change. But in the other, in another perspective, you're wrong in that as a person, you're okay. It's not that you have discipline issues. It's not that you have personal issues, deep psychological issues. Just the fact that you've made it to the point that you're in a position to trade demonstrates that you have what it takes. You're okay with money. You're okay with discipline. You're okay with success. You've already demonstrated all those things. Otherwise, you wouldn't be in a position to trade. So as a person, you're okay. As a trader, though, you're missing something. And deep down underneath it all, you know this. But again, the important thing is you got to trade. You have to, get the focus on the right thing. So long as you're thinking it's a personal issue, you're going to focus there and miss the real problem that it's something else. You as a trader. So, and besides, when you're beating yourself up, all the self-blame and chastising and everything, all that's just counterproductive. All it does is tear down your self-esteem. And I mean, that's just a horrible cycle. You know what I'm talking about. So, the cool thing about this is, if you've been looking at the situation and you're thinking that your inconsistent results or your poor results are due to lack of discipline and deeper issues, well, now you get to see that there's more to the story. And by seeing the complete picture, now this is going to expand your mind. You'll be able to function a little bit differently mentally. And when you change, everything changes because you're at the heart of your operation. Now, let's go back over to consistency as it relates to a function of your trading business. Back in the 60s and 70s, this is a cool example. It's one of my favorite stories, so you like this. Anyway, back in the 60s and 70s, the Japanese car companies had the reputation of making cheap little cars. They're cute and they're fun, but they're cheap little cars. And so they struggled to establish a good foothold in the American marketplace. And I had a Datsun back when I was in high school, so maybe you were back familiar with those days. They were cool, they're fun, cute little cars, but they had the reputation of being cheap, and that was a big problem. And they were tired of that. They wanted to go ahead and get on with more profitability, better prestige, all that kind of stuff, more market share. And so they hired Edward Denton, a quality guru from America. And he went over there and he helped them change their mentality and their approach to what they were doing. Instead of always focusing on being cheap and keeping their costs down and just running as lean as they could, he told them to focus on quality. Buy better materials, take the time to buy better equipment, focus on your processes, all this kind of stuff. And they applied his recommendations and started producing much better quality cars. But it wasn't just the products that were improving, they were improving their operations as well. They got a handle on what they were doing internally. And through good process control and other quality tools, they made dramatic improvements all the way around. And as you know, in the 80s and 90s, then you had your car companies, Nissan, which was Datsun, Toyota, and Honda. All of a sudden, instead of being cheap little cars that they had the old reputation, it's like, wow, hey, if you want a good car, buy a Japanese car. And that became the whole perception because they were producing excellent cars. Everything improved. Their reputation improved, their profitability improved, their internal operations improved, their market share improved. Everything all the way around just went great. And Japan went from struggling after World War II to, again, returning as an economic superpower because they had this whole quality culture throughout their whole country, but especially in the automotive industry. So the focus on consistency and quality has a huge payoff. Now, how is this related to trading? Well, prior to trading, I was a quality engineer. I worked in a manufacturing plant. It was a $100 million manufacturing facility where we made literally billions of plastic bottles for Coke, Pepsi, Gatorade, all the bottle, soda and water bottlers. And it was a high-speed, high-volume, razor-thin margin operation. We had no room for error. If we had screwed up on line, it could cost us hundreds of thousands of dollars in no time because, again, it was high-speed, high-volume. So we had to absolutely be on our game every day throughout the entire operation. We had 7 different departments, 4 different shifts, and everybody, we had to get good, consistent performance out of everybody or it cost us just like crazy. Now, so that's what I was doing prior to trading. Now, I made a discovery, well, after I made the move into coaching other traders, and I had a lot of people with this one spell several years ago, people coming to me asking for help, primarily with hesitation, but some of the other common psychological, so to speak, issues, hesitation, getting in, pulling your trigger, all that kind of stuff. And what we found when in working with these people, what I found was, okay, yeah, here's the typical or generally accepted reasons, and we explored those, but it was bothering me because it's like, wait a minute, I've seen this before. This is not a people problem. This is a systemic problem, because I'm seeing the same thing with a lot of very astute and competent people, very successful people. And so that tells me there's something wrong with, with the way the whole trading industry is organized. And so I kind of went back to my roots with quality, and I said, all right, let's take a look at your trading system. And I asked people, I said, what is a trading system? And usually the answer that I get back is, well, it's my set of charts and rules and indicators. And that right there is a mental error. And I went through some epiphanies myself in working with everybody. And again, that's kind of cool. It's not those things. Your trading system is what you do. It's your process for placing trades, and it's a decision-making process. Now, the cool thing about this is, when you look at trading not as just, in your system as a set of rules and indicators, but a process, and you look at it like a business process, now you can apply the quality tools and practices to apply to gain some process control and control over what you're doing and achieve consistency. Because again, quality has been around for decades. Quality assurance, not quality control where you're putting an inspector online and just catch bad products as it's made. We're talking about quality assurance where you knowingly are making good product or good services. Now, the cool thing about quality is it's applicable everywhere. It's not just for manufacturing goods. It's good for services. It's for everything throughout the entire business, including management. And it can be applied to trading. That's what I was able to do. When we started doing this with me and my coaching clients, what I found was, and they found it was great, was when we fixed their system and mentally how they were addressing it and putting in these tools and practices, the problems just kind of faded away. And their confidence just soared because now all of a sudden they're getting a solid handle on what they're doing. And if you think about it, it makes perfect sense. Again, it's not a people problem, it's a systemic issue with trading. I had seen this before, and so it's just a matter of saying, all right, let's approach it as a process control issue, not a psychological, personal issue. Let's look at it from a business perspective. And when we applied the full methodology and tools, it was fantastic. And the neat thing about it is I had the good fortune to work in engineering and also in the quality field and have years of experience as a trader, all three. So I could see how these things can come together. And now, hey, you've got a process to really get some solid consistency in your trading. So what I wound up doing was I created a program specifically for traders. And the first step in this process was to define your trading process. Even Dan, this is so funny because when I present this to people, sometimes it makes them mad, sometimes it hurts your feelings, but it's true. If you can't describe what you're doing as a process, then you don't know what you're doing. And sad as that sounds, there are a whole lot of traders, they're working with a system, it's not really a system, and they can't describe what they're doing as a process. And they wonder why they're struggling with consistency. It's because they can't even describe it in a way, like I said, as a process. So that's the first thing we got to do. Now, when you learn how to do this properly, when I teach my clients how to do this properly and how to properly define the trading as a process, the neat thing about it is the first thing is clarity. Now, instead of this kind of vague, kind of cloudy, little confused feeling, it's clarity, and it's like, wow. And interestingly enough, what I've had a lot of people say to me, and this really caught me by surprise at first, but it's happened a lot, is people will tell me that after getting the process defined and documented properly, they have a feeling of lightness about it. And I got to think about it, and after a while, it's like, yeah, it's because that stress is gone, and that all that weight and confusion and the mental activity, short circuiting, and all that kind of stuff is gone, which is cool. Now, the second step in this process is you take your system, now that you have it properly, the process defined and documented, now you want to prove that it works. And here's where we attend to the catch-22 that gets so many traders screwed up. Here's the catch-22. Most traders can't stick to the system long enough to establish the confidence they need to stick to it for any length of time. And so they just go through the whole cycle of, well, I can trade with it for a little bit, and then, man, I'm over here deviating with it, and crap. And so they can't get along, they can't go long enough to get that good, solid confidence with it. When we test it out, when we prove it out properly, it confirms the system's potential for profit, and we also determine its true strengths and weaknesses, so that you have a good, clear knowledge of what your system can and can't do. And that's really crucial. Now, understand that simple back testing by itself isn't enough. A lot of people come to me and they say, Brian, I get it about back testing and everything, but man, I can't seem to get my, my regular day-to-day results to match up with my back testing results. And that's from, an understanding that you do need to test things to prove it out, but you have to understand the testing process and how to go about it properly. I ran into this in the manufacturing world, I ran into it in trading, it's the same thing. You have to understand the testing process and how to apply it, and also how the numbers are generated, where they come from, so that you know when to count on them, when to challenge them, and when to just outright ignore them. So, and the whole reason for this is you need to go into your trading day with realistic expectations. That's absolutely critical. If you're thinking that your system is never going to have more than 2 or 3 losing trades in a row, all of a sudden it hits 5 or 6, which are actually perfectly normal for it, but you had the false perception that 2 or 3 is what you should expect. Well, that 5 or 6 is going to totally throw you off in a wreck and destroy your confidence, and you go down that cycle again. So realistic expectations are critical, and knowing how to prove it out so you know its strengths and weaknesses is critical. So the neat thing about this is when you know how to prove it out and you do it, you get that feeling of peace with the markets. It's no longer feeling like the markets are just an antagonist that's out to ruin your day and take your money. Now you can go to the markets with a sense of peace, much lower stress level. Your fears and anxieties go away because now you've got a good solid grounding in reality, and you get this mental shift from survival to, again, just okay, now I'm going to go about what I need to do, and it's more of a matter of fact and a comfortable mental state to be in, instead of survival and again feeling that markets there just to ruin your day. So the third step that we want to do in this process, really for good solid process control and making it you're trading a good functional business that you can count on, is we want to maximize your profits. And one of the best things about it is when we do this, again, that just further establishes more confidence in your system, because now you learn how to make changes in a calculated and business-like manner, and you can adapt to changing marketplace conditions. Again, it's knowing how to do it properly. You stay in this forward progress mode through continuous improvement and a well-organized, properly organized method. So when this happens, you get this eagerness to go engage the markets. Now you're not afraid of the markets, and you're just figuring out how you're going to survive and how you're going to make work, all that whole mental state. Now your mindset is an expansion. It's like, cool, yeah, I always want to try this, and I see the opportunities over here, I want to try that. And you know how to go about it in a very controlled and business-like manner. It's not just playing games and throwing money here and there. You're doing it in a knowing manner. That's cool. And that is just, it brings back such an excitement for yourself and your future as a trader. So I call this process that I developed, this program, I call it Trading System Mastery. And really what I did is I took the problems that I found that were common to all my clients, all the recurring themes, and I formulated it into a kind of a standardized coaching program. Again, because there were so many repeated things. And then I refined it over the course of 18 months, working with dozens of traders. And the initial coaching program cost $997 and took about 30 days for people to complete on average, anywhere from 2 to 6 weeks, depending on the individual and their circumstances. But the cool thing about it is when they came out of it, they were entirely new traders. It wasn't just a new thing that they had picked up. They had been able to expand their mind, expand their understanding. They had new tools, they had techniques to apply, good practices to put into place. They were a whole different trader, and that's why they were able to move forward. They weren't just the same person with a new thing. They developed into a new trader. They developed as a trader into somebody who really did have some good, solid mastery over what they're doing. And again, this was all in 30 days, and it's very cool. The typical results for everybody, the main thing was relief. I had so many people that that's the first thing on their mind is, man, I just feel so much relief from the stress, from the aggravation, the anxiety. It was wonderful, and their confidence. With a lot of people I coach, I would ask them at the start of things, where are you at right now as far as your confidence? And on a scale of 1 to 10, and that almost invariably they'd be a 2 or 3 to start with. But within just a few weeks, I'd ask them again, and wow, yeah, now they're like an 8 or a 9 or a 10, and that's cool. Their physical appearance, their manner, their energy, everybody would seem to notice it about them, and it was so cool because now instead of being all stressed, they've got this calm and a sense of ease about them. It was very, very cool. And of course, some renewed excitement for the trading, that always helps. Now, I know we're on Untitled time, and I hope that you found this very helpful. That was my whole point, is to give you some different perspectives on things. Instead of just looking at your trading as a way to make money and something to do, maybe you can look at it as a process and now, apply process control to it. Again, the things that we've talked about. I've been able to cover about 30% of what I would normally of what you would need to know to really implement this, so again, because of our limited time. Normally, it would take several hours, not a lot. So like I said, not weeks and months, but again, a matter of hours. So it's almost time for Q&A. And if you'd like to take this further, yes, I do have a special offer for you. I'm going to tell you about it right now. I want to take a few minutes, and then we'll get on to Q&A. And again, I also do have the gift for it. So that's where we're going to go next. To take a quick second, see if we have any questions. Anybody have any questions? Do go ahead and start typing them in, and I'll address them here in just a few minutes. I'm trying to keep with the schedule, that's all. So, Matt, again, I do have an invitation for you. You can begin your transformation today. This process, while I used to do a one-on-one live coaching with people, it is available through online training. It's a home study course called the Trading System Mastery, and the modules are just like what we were talking about a few minutes ago. You get an in-depth how-to, and you can get through everything in less than 5 hours as far as just watching the videos. Not doing everything, but you can have a look at everything in less than 5 hours. The first module is where we take a look at the proper way and where you do it with a good understanding, easily repeatable. And again, this is regardless of how you trade, what you trade. It doesn't matter. This applies because again, it's just a decision-making process. This is applicable. You don't have to switch systems. You can use what you've got. This includes a lot of the key insights and the tricks of the trade from my quality years, and I was good as a quality manager. I took my client from last place in our rankings to first place within 2 years within the company and with all our customers. So I do know the quality part of it. Again, it was a natural fit for me, and I want to share all this stuff with you and how to apply it to your trading because it's so effective and it will make your life so much better. The second module, you get a good precise measure of how good your system is to the dollar, and you establish that realistic baseline. So you're going into the markets, knowing exactly what to expect. You get that stress and that anxiety, the fear of the unknown off your shoulders. And then the third module is where we maximize your system's profitability and keeping you in this always moving forward, but doing it in a very organized, calculated business like manner. So you know you're moving forward. You know that everything that you do is working for you, not against you. Now, you might be thinking, well, Brian, that's cool. I understand this about the kind of hard side, which trading as a process and all that kind of stuff. But I've still got some just plain pure psychological stuff to deal with, and I understand that. And that's why, as a bonus, I'm including the Trader's Guide to Emotional Management, which is essentially emotional intelligence for traders, and it deals with over 50 specific mistakes that traders make. It gives you specific actions and tools that you can apply to address those, again, purely psychological issues, and also as far as how they relate to trading. So as far as the psychological side of things, we're addressing that here. The second bonus is Trading Performance Analyzer, which is an excellent tool, again, for doing the analysis, for tracking the trades, for keeping a rolling measurement and metrics on your trading, but doing it all in a very easily mentally manageable manner, not overwhelming pages and pages of numbers. No, this is real simple, very meaningful, very useful. Self-sabotage. Some people, they say, well, I get all these things, but man, I just can't seem to stop sabotaging myself. The third bonus I keep in here is so that you can understand where the self-sabotage is coming from. This video I made, it's 4 forms of self-sabotage that are very common, but can really be screwing you up as far as your trading. So that you can understand that. And they say, well, it's cool, Brian, but I don't want to buy another system. I want to create one of my own. I'm not sure what all needs to go into it. So I also include this video. It's 10 essential components of a high probability winning trading system. Everything you need to have in it, so you do have a good, solid, well-structured trading system, trading process. And the fifth bonus is really cool. You may be saying, well, okay, that's all well and good. But even once I get all this in place, I'm still trying to figure out what I want to do in general, just get my whole trading business organized. So what I'm including as a fifth bonus is the first 4 lessons of a 6-month program that just focuses on your trading as business called the Trading Pit Club. And these exercises in the first 4 lessons are really the foundation exercises for your trading business. And so it's a 6-month program. You get in the first month for free, and you can continue through it if you like. You come out of it with a business plan, and whole nine yards, really the high level, as a business owner program. And so you can continue with that if you want. It's just $99 a month. Drop out anytime, if you want to, or you can go all the way through it and really be attending to both things here: your trading system with the Trading System Mastery, and the trade, your business aspects of your trading, and you being the business owner with this program. So I'm including this as well. And again, it's just free. The first 4 lessons are free. If you want to continue, you can. If you don't want to, that's fine too. Just let me know. But again, this is great for getting your trading business organized, focused, and planned. So now, okay. Yeah, I'm gonna have to wrap this up pretty quick. Renee's letting you know. Just got a few more minutes left, so let's keep on rolling here. And oh, an extra bonus for and understand something is closed right now to the general public. This is your only way to get in. This is your only window of opportunities today. But also understand, you're looking at this, if you want to sign up for it, we're not getting married. All you need to do is take a look. If it's not a good fit, just say so and get a refund. Again, it does have a 60-day peace of mind guarantee. I've been on it for 11 years. Back to guarantee. This is not a lifetime commitment. You'll know within an hour. You can get a quick look at the program and you can find out within an hour. So today you can look at it in an hour. Anyway, the thing is, you want your trading produced, you want consistency. You're doing this for more than just you. So really, it's just an easy decision. Get that money in your account, financially, time-wise, functionally. It really is. It's an easy decision. It's going to do good things for you. Now, how to get started? Instead of the $9.97, it's $4.97. Go to insideouttrading.com/SOC, and that's how you can get started. If you want to use the Action 100, save yourself an additional $100. Cool. And other.
All right, guys. I appreciate your patience there. Again, yeah, I've been fighting my allergies like crazy, so
I'm glad you're here, and welcome to the Science of Consistency.
Here's the thing, and I had a talk the other day with my audience, and talking about the two different types of traders. The thing is, whether you decide to try to be the type of trader that really develops yourself for skills, and you want to grow and become a very successful trader on your own, where you're fully competent, you're not dependent on anybody else. This is a skill set that you need. You need to know how to define what you're doing, how to properly formulate it as a process. So one thing that really screws a lot of people up is making a huge mistake where you mistake the strategy for the system. There are tons of clever strategies out on the internet right now, have been for a long time. And they're very clever sounding strategies. Some of them are actually based on a good premise. And the people selling them are sitting there saying, look at this clever strategy. We entered here and we exited here, and look at all this money we made, and you can do the same thing too.
And hey, Brian.
And they put it out there. Pardon me?
We've got some questions in. You want to take some Q&A?
Yeah.
Okay.
Where's the question box?
Let's see. We've got Srinivas. He says, what are your trade statistics, win-loss ratio, percentage wins, monthly, yearly income potential, etc.?
As far as my personal numbers, I get that question all the time. Generally speaking, to round it all up, I make about 18% a month, or account ROI. And I've been at this for 14 years, been teaching people for a lot of years. What are the questions you got about the topic of consistency?
Well, someone is asking initial capital, etc. needed.
Well, a lot of it depends on your goals and where you're at. If you're wanting to, provide an income for yourself, and you're saying I want to make about $5,000 a month, to live on, well, you probably ought to be starting with at least 50 grand. 10% monthly ROI I've found is not unreasonable. If your system has a 50% win rate, you got a 1.5% profit to loss rate, or 1.5 profit to loss ratio, and you're placing one trade a day, 20 trades a month, that'll let you 10%, because your expectancy is going to be 0.5% of your account. And that is assuming that you're trading with a 2% per trade risk limit. And so your function of your profit is going to be your per trade average, or some people refer to as expectancy. That times the number of trades that you can place per month. How frequently are you making that average return per trade? So as far as numbers to use, it's relative. Like I said, as far as account size, I tell people, and I found it to be very true, to expect to make 10% a month is not unreasonable. It's not super aggressive. Again, if you got a system that has a 50% win rate, 1.5% or 1.5 profit loss ratio, placing one trade a day, and a 2% per trade risk limit, you're going to make 10% a month. And so, if your goals are, like I said, you want to make, $5 grand a month, you need a $50,000 account and a system that meets those performance parameters, which is not hard to find. What else you got?
Does this work in all asset classes?
Yes. Yeah. This is, and I was trying to convey it in the presentation. This is about how to get what you're doing clear and consistent. Again, the whole thing about quality is generally applicable. It doesn't matter what your business is. Whatever you do to make money, you want to get consistent about it. You want to do what you do to make money consistently well every day. And that's what quality is all about. And that's why I found it so applicable for traders, because that's exactly what traders need, especially considering the dynamic environment that the markets are. I mean, every business has its variables to deal with. And so quality is how you take what you're doing and you make it very robust and you make it consistent within a dynamic environment with those external factors that come into play, that without a good process and the tools and, again, approaching it from a process perspective, if you don't have these things in place, yeah, the external factors, the dynamic environment, it's going to have you all over the place. And eventually, things are going to catch up with you, usually sooner than later. That's why so many people, they'll buy a system that sounds great, and it doesn't take long until, no, it's not performing the way I expect it to. And, within 30 days, most people have abandoned a system that they've just purchased. It happens a lot. And it's because it's not built for consistency. It's a clever sounding strategy, but a strategy isn't, how you're going to do it hundreds of times over the foreseeable future. The system is how you're going to do it, consistently over time. But anyway, like I said, it's generally applicable. It doesn't matter what you trade, how you trade. This is how you make it consistent. Everyone, and like I said, it's cool because I've had people come to me and they're like, "Oh no, Brian, this only works for technical traders." And I'm like, "No, if you trade the news, if you trade in fundamentals." I had one guy, he came to me and he said, "All right, I trade astrology," and we made it work for him, and he got profitable. A coin flip system where it was a purely random entry made him profitable and consistent. And so this works. That's the whole point. Like, I didn't invent quality. It's been around and it's been proven to work in every industry on the planet. This is just how you take what you're doing, you get clear on it, you get it dialed in, and you make it consistent.
All right. Well, hey, thank you for your time. And now we will move on to our next speaker.
Right. Yeah. Well, thanks everybody.
All right. So our next speaker is Jared Putnam, and he is a student of human finance behavior and transaction mechanics. Jared Putnam is the founder of Trading Supra. He teaches traders how, when, and where to use real-world trading processes for trades spanning seconds to months. In his 23 years of experience, he's helped hundreds of traders and high net worth individuals across futures, futures options, stock options, Forex, and cash markets. And without further ado, we're going to hand over the reins to Jared Putnam. Jared, we cannot hear you.
There we go. I didn't click the microphone. My mistake. Hello, welcome. I take it you can hear me now.
Yep, we can hear you.
Super. Thank you so much. I appreciate it. And I'll assume you guys can also see the screen. And so I've got some information prepared. My main goal is to, with every trader I work with and with every group that I speak to, my main goal is to offer something of value. And the value that I'm going to endeavor to impress upon you today is how to take some real world common sense, some off the screen common sense, and how to transplant that into a trading approach. And so It's oftentimes the case that traders can become overwhelmed, overrun with information, overrun with feelings, live, real market time decisions, real money pressure. All of those things can take a fantastic, terrific plan and completely turn it inside out. And so I'm going to endeavor to help make sense of your approach for greater consistency, as you can see. So I'll just briefly introduce myself here. And so that's me. I'm Jared Putnam, and I make tools that work in NinjaTrader 8. And a little history, not much. I'm not going to go on and on about this. My first trade was back in 1997. It was in sugar futures. I started out, I had read a book about commodity trading. My wife actually had talked to me over and over again, you should look at this. I think you'd be good at it. I think it's up your alley, things like that. And so thanks to her, I finally took a look at futures back when we were very young. And so my first trade, I was just had turned 21 years old. And so traded in futures, traded in sugar. It was a winning trade. And I thought from that moment on, this is for me. I like it. Today, areas of practice that go into my approach: price patterns, Fibonacci applications, statistical arbitrage, volume price analysis, bid-ask, order flow analysis, and algorithmic applications. Those are areas that I've spent quite a number of years, lots of time practicing, researching, implementing, and that's some of the things that I use on a daily basis. I apply my skills in a couple of different ways. I trade for myself. I have in the past. I don't currently trade family accounts. That's a story. It went well, but I also consult on positions. So for various instances, individuals that are paid in the form of stock options, I've consulted with them and helped them in some cases be able to squeeze greater value out of that part of their compensation. And then also I do work with traders one-on-one occasionally. And so a theme, a focus of today's discussion is a quote made famous by Michael Jordan: "Get the fundamentals down and everything you do will rise." I'm not going to go on and on about Michael Jordan, but if you just look at the skills in terms of on the court, his fundamentals in terms of passing, dribbling, shooting, boxing out to get rebounds, all of these things, those habits were all at a very, very concise, very high, exemplary, fundamentally speaking. And so I strongly believe that when it comes to markets, how they behave, there is a way of a viewpoint, a way of looking at things that you can implement and then apply across any number of symbols and any number of circumstances. And so the fundamentals that I want to talk about today, and that I hope will offer some value to anyone listening, is steps to greater consistency. Step one, oftentimes traders that I've worked with will tell me about their trades, and they'll say, well, I got long here and here's how it went. I waited, I did this, I then sold short, I bought, and on and on. And one thing that stands out, and even looking at my own trading at times, you know, sometimes the market can spur us to take certain action if we're not disciplined. And afterwards, we'll look at a trade, and perhaps you've done this even recently. You review your trades and you go, wow, why did I even take that trade at that location? Where we trade is something we need to spend, we need to make sure of first. We need to know, does the market actually even care about the level we're considering trading? Does it even matter to the market? If it doesn't matter, then hopefully it's a very short-term outlook that you have, and hopefully you're just trying to grab a few ticks, because it's very difficult to get a good result. And you know, so talk to traders, you say, oh, well, my big target's way over here. Well, you're never going to see that big target if you're starting from a level that really doesn't have an impact on the market in the first place. And then, okay, if you do have levels, So like I had mentioned at the outset, if you're trying to take some real world application and you're trying to, or real world habits, and you're trying to apply those to the markets, let's just think about any outside of the screen business. If you're a florist, you have to buy your inventory at a good price in order to then sell it, but you obviously naturally need customers. If you have customers and the customers are okay paying 10 for something you can buy for 4, then fantastic. You've got yourself a good floral situation, a good chance to make some money as a florist. When it comes to trading, first, does the level matter? In other words, are you able to get in at an advantageous price? If you're selling, are you able to sell high? If you're buying, are you able to buy low where the market is uncomfortable and very likely to very soon get moving away from in favor of either resistance, selling short, buying, going long? Are you at a level that matters? Are you getting in at the right price? Are you buying those flowers at $4? And then does the market trade your levels often enough? Do you have customers? If you buy them at 4 and you put up $10, but no one shows up, no one's available to buy, then your good purchase price isn't really that advantageous because it's not coming around very often. You're not seeing the potential of it. And so if we apply that to trading, we want to work from support and resistance that actually matters to the market. And then we want that support and resistance to be something that trades often enough so that we have a viable business, a viable chance to realize the good fruitage, the profits of our good idea of this level. And so that's a look at step 1, how to get greater consistency in your trading. First, consider carefully the where aspect of your trades, the location. Now let's consider step 2. Step 2 to greater consistency is when, the question of timing. Now, I don't have the comments open right now, but if you guys would please, I'm curious to know, when it comes to timing, do you find it easy? Is it so-so? Or is it difficult to time your trades advantageously? And just thinking recently, not, you don't have to go back and clear the cobwebs if you can, if you want to, but just curious, in the recent memory, for those of you that are active traders, did you have good timing today? How was your timing this week so far? And so when should I trade is another area to really spend some time on in terms of clearing away the non-essentials. And so, do you know when your trade opportunity has come along? And if so, how? If you don't 100% have a clear answer for that, then you're very likely to struggle. And the severity of that struggle will depend. But it's highly likely that if you don't know when, now is a good time. If that's unclear, if you're uncertain about that, it can very easily interfere with and inhibit your profitability and your success. And then the next question I put in here is, how do you handle a different look? And so if you trade actively and if you've traded for any length of time, you can have a level, and the market can, and historically you can say, well, this level is something that impacts the market, so I do like this level and I am going to trade it. But we all have seen the market sometimes trade to the level, give us what we want to see, and then advance, and everything's just as simple as can be. It's so easy, right? Just make money clicking the mouse. When in reality, very often, every once in a while we get that trade, but very often the market will give us a different look, won't it? It will raise questions. It will pressure just further than the last pullback and make us wonder. In those cases, how are we able to handle those? Because they happen often. And if we can't handle them, then again, our ability to succeed on a consistent basis, this is not just can you pull off a winner every once in a while, this is can you consistently have a trade operation that works, that will move you forward. You have to be able to handle a different look, and you have to be able to answer 100% clearly, when should I trade? When is the right time? It's at the level, should I get in now, or should I wait for, is it going to pull back further? is it ready to go yet? Am I going to get in and then hold this for 20 minutes? Or is now the time? If you can't answer that, then you want to spend time getting the answer on that. And we'll move on now to step 3. Step 3 to greater consistency is how, the how aspect. How should I trade? And I know that might sound vague, so I'm talking specifically how you trade is how are you going to pull this idea off? How are you going to take this idea, I've found a level that matters. I've found a time to get in that I think is just the right time. I've researched it and over again, the market's ready to run as soon as this happens. You found the where, you found the timing, the when, but how are you going to pull that from the market? How are you going to reach out, get those orders in on time, and then have, when you do get cooperation, take the profit, manage the risk. If it's cooperating quickly, collect new profit or protect unrealized profit. You see how these things can come up and do come up. Just yesterday afternoon, did you see the big run before the close? Late in the afternoon yesterday. Referring specifically to NQ, June NQ, hanging around in the 86 teens, and then in a brief moment of time, skips 86.20, 86.30, 86.40. And so there's real money there, but if it's all an idea and we're hoping to just execute the trade as it happens, sometimes it can be a little too much to handle for our human makeup. And so when it comes to execution, have you arranged a system that offers you certainty? First of all, will it just execute the prices you want? We can all look back, and we've probably all done this. We've all looked back and said, here's the level I've found that I like. Here's the timing, and oh, there it is. And look at that. It just works over and over again. Look at that. It just works. It just works. And raise your hand if you're sick and tired of seeing that, but not making money off of it, because we've probably all done that. And it highlights the need for not just generally recognizing an opportunity, but an absolute must-have for a consistent, full functioning operation is to have an execution system in place so that the prices we want, as we look back and say this would be ideal, so that those ideal prices are what we're actually going for in real time, which is the only place we're ever going to make any real money is real time. And so we've got to execute or have a means to execute ideally, and that needs to offer us certainty so that we can't have bugs and glitches in that. And then obviously speed. That almost goes without saying, but is definitely something to call to mind. And so the model that I operate under in terms of helping others is I provide battle-tested trading processes. I provide automated software tools. I provide live application training. So the markets move, they throw us a different look, they do different things, and automated tools can be engaged and disengaged. And so I offer live application training as far as how to match those items and how to keep up with the market while still implementing as much automated helpers as we can, commonly known as algorithms, but that's basically what they amount to. And then also another aspect of the business model is providing context for greater success. And so when you can contextualize an opportunity, they're not all created equal. If you've traded for any length of time, you've probably seen your trade setup, whatever that might be. In some cases, it works to the tick. Your first target or your target is reached, and then the market, kaboom, comes undone. And you're like, oh man, I'm so glad I got out. And then in other cases, same setup seemingly, and goes to your small target or goes to your profit target, boom, I get out, happy, made it. And then no more than 2 minutes or 10 minutes later, you look and you could have made 5 times what you just got out, what profit you just pulled out of the market. And so by providing context, contextualizing the environment in which your trade setups are happening, you can very oftentimes posture yourself toward the market for greater success or for less of a difficulty. And so this is what it looks like from today. This is just a quick grab. I grabbed an ES screenshot. And so this is one of the tools that I use. And there are multiple that I feature in the live room, but this is one of them. And I just thought I'd show this because, you know, I put in here, and this was actually a few weeks ago when I wrote, it streamlines the workflow process. You get real-time help putting technology tools to work, and the process produces key efficiencies. I wrote that a while ago, but I thought here's today. You can't make this up. All this is programmed. The market actually did trade at these prices. You'll recognize this if you traded the ES today. And so what does it mean, streamline the workflow process? Well, it answers, where should I trade? By guiding and showing. There's various highlights. This is one tool. It highlights as the market produces new instances, in this case of buy-side pressure. It tracks those prices at which the pressure came into the market. And then we use those as a reference if and when the market revisits. And so we can see 3 instances today, pretty easy to spot there, where the market came back, pulled to the top edge, pulled to the center, and then pulled back to the top edge one more time before jolting upward yet again. And so the where aspect, that's one of the tools, addresses that automatically. So it streamlines those questions for you. It answers those questions just as they come up. In terms of timing, you can see at the top, underneath the symbol and the minute designation, you can see various buttons are up there, and those are what I call Tradulator. That's a strategy that recognizes shifts, real-time recognizes shifts in bid-ask pressure, and is able to detect instances where the market is more likely to have a drift, in this case in favor of the bid, and so an upward price drift. And so we can see that Tradulator addresses the where aspect, and then the how also Tradulator automatically enters, and you have control over this, so you can tell it what you want it to do, but basically it automatically handles the execution aspect and makes a lot of those difficulties that can come in as far as keeping up with the market, getting your hands on the profits, or okay, it's up and then you go to get out and you missed out on $300, something like that. And so I thought I wrote that a while ago, and now here's today. So I thought I would just show how you get some real-time help, both from the technology itself, and then also from the live room that we do each day, Monday through Friday. You get real-time help kind of melding it all together. As a thank you to everyone, thanks for attending. I appreciate it. As a thank you, if you'd like a free 30-minute conversation, I will drop a link into our chat here, and you guys are more than welcome to set up a time. You can just automatically select a time, and that's free until Monday at 6 in the evening. And I thought I'd just share with you, this is actually from today. This is what some super traders said today. And so one of them, he emailed me from his iPhone, Xavier, and I just blocked out some of the sensitive info. But anyways, he says, by the way, I'm very happy with your, and then he puts ours with a big smile, our strategies. Thanks for sharing all your knowledge. Another Supra trader says, in total, I executed 6 trades today, and that is referring to today, Wednesday, June 3rd. She had a combined position of positive 46 ticks. Her daily goal is 50 ticks. So she says, I'm pleased with today and convinced that if I consistently hit that level, the money will eventually follow. And Sergio from Mexico City said, and this was earlier today, he's plus 37 ticks this morning. And so let me now see if I can get along with this technology long enough to find the chat. And does anyone have any questions?
Hey, Jared, I will
you guys can
jump
probably
in.
still see my screen.
Yeah, you can hear me, right?
I sure can.
Okay. Yeah, I'd be happy to pass along some questions to Jared if you have some. Anyone? Please feel free to throw me a couple of questions and I'll pass them along.
Okay, great.
Oh, here's a question. Is this all for futures?
It is not all for futures. If you trade securities, you can use it for stocks as well.
Excellent. Well, it looks like you must have explained that so thoroughly that everybody's questions are already answered. So I guess with that said, you're off the hook. Thanks for joining us, Jared. We really appreciate your sharing your time and your knowledge with everyone.
Yeah, my pleasure. Absolutely.
And I am going to take the reins here. So let's see here. Right here. Okay. We did earlier have a few people asking about recordings. Are the recordings available? That question's answer is yes. As a matter of fact, they are. All you need to do is surf on over to tradersexclusive.com. Just go under Traders Education, Educational Webinars, and you can find all of our archives right there. This has been a presentation of Traders Exclusive. Thank you for spending your time with us. You can follow us on Twitter, twitter.com/options_info. And again, our website is tradersexclusive.com. All right, everyone. Have a great day. Thanks for joining us. We'll see you. We've got another presentation coming up in just a couple of weeks, so be sure to check your email. That presentation will include another 4 industry leaders who are going to share their trading knowledge with you, and we're really excited to offer that to you as well. Have a great day.